Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. It's yes, we caught it. Hey, guys, 200 pips, please secure.
Hey everybody, welcome to Stock Sniper Trading. My name is Ron, my partner is Dave. Welcome. It's a beautiful Friday, 11 a.m. Eastern. It is February 21st. Welcome guys, good Friday, Jummah Mubarak to everybody. Thank you all for joining. I appreciate you guys. It is the last trading day of the week. It's going to be mid-afternoon going into power hour into the New York Stock Exchange close. So please guys, on all Fridays, trade responsible, trade with proper risk management. As I was saying to you guys on the Zoom, if you guys have had a great day already trading, if you've had maybe a fantastic week, if you're at your weekly goal or above, or maybe you've now got 2 weeks together of profitable trading, just let's not please do anything silly on the last few hours of the market. Let's go into the weekend. Let's start to get to see how this feels to go into the weekend up, and then start to do some review on the weekend and carry that momentum into next week. And finally, we're going to finish off February, and then we start a whole new month in March. Okay, so just want to say to those that are really doing well, congratulations from myself and Dave, and those that are still working on it, take your time. Remember, this takes time to learn. You're not going to learn this in 1 day, 1 week, 1 month. It takes time, okay? So just continue focusing on your risk management. Continue improving your discipline, continue to improve your patience, and the rest will all come in. We'll take care of the rest, teaching you price action, fundamentals, technicals, all of that. But I need you guys to really work on your own personal risk management and controlling the emotions in the market. It's very difficult for Dave and I to really help you guys control your emotions. That's a personal thing. Nobody taught me how to control my emotions. I just had to learn how to control them when I was losing a lot of money. And I also had to learn how to control my emotions while I was becoming profitable in the market. So continue working on this. Guys, the plan for today, we're going to go till 1:30, 2.5 hours. Going to be a good stream. But what I want to do is, at the first maybe 30 minutes, is I have over here trading securities at all-time highs, because you're going to see in the next little bit there might be some securities that are flirting with all-time highs, and gold is one of them specifically here. So what we're going to do is we're going to combine TradingView with a presentation about trading at all-time highs, specifically gold. I kind of want to bang this out in about 30 minutes so that this is out of the way, and then we can go back to what we regularly do here. We can break down gold top down. We can get into US 30 and NASDAQ or S&P, and then look at multiple securities. But I hope you guys learn something about this, about gold, how it trades at all-time highs, and maybe the presentation can help you think about different things, or we can talk about things. But I'm not starting there yet. Let's just go real quickly through the news. Forex Factory, guys, if you see our blog right here, we had a blog yesterday. It's a free blog available for you guys on our website, stocksnipertrading.com. Come over here to more blog. And you see right over here, here was a blog on flash manufacturing and flash services. So if you don't know what this is, there's a thorough breakdown of what this is. And get to know your folders. Get to know, because today was a day where it was all manufacturing and services news throughout the entire day, and a lot of consecutive red folders throughout the entire world at all of these different currencies. Okay, so get to know that, and that will be for Friday. As you can see, we did have earnings today. Again, no big names on the Friday. The big news was this. Some of you guys are wondering, why did the Dow Jones take that big tumble? What happened? Like I was saying, that's why I want to start to do this. Maybe next week we'll have US 30 breakdown with United Health breakdown side by side with a little bit of webinar to get you guys caught up. United Health, UNH, this security right here, it comprises 10 to 12% of the entire weight of the Dow Jones, just this one corporation. So you can see here there was news that came out early this morning. United Health falls on the Department of Justice probe into Medicare billing, and they were down 9-10% today. So that's why US 30 took that big tumble. It had to do a majority of this news right here. So I'd like you guys to continue to learn while we're trading in the markets, but I kind of want to do it like a webinar style, and then we get back into the markets. But this will really help, I believe, guys, with everyone's education here, and we can continue to learn. So if we're talking about NASDAQ, like what I can do is we can also learn about NVIDIA at the same time, because NVIDIA is a big contributor to the way how NASDAQ moves up and down. So we want to get familiar with what is NVIDIA, that corporation. We could do this for a lot of big names, and then how they can affect the direct indices that they are traded into. Okay, but continuous learning, guys, that's what the game is. Let's continue learning. Learning is wealth, learning is knowledge. The more we know, the more we can do in life. Okay, so let's just continue learning. So welcome everyone on Zoom. Thank you guys. Welcome. Dale, Pedro, thank you for joining. Daniela, welcome. Val, Aaron, good day. Everyone on YouTube, how are you guys all doing? Tony Gold, Habibi, Jumal Mubarak, welcome, brother. Let's continue learning, Tony. I know you're killing it, but let's take it to the next level, Tony. Trading with confidence, welcome, Sammy. Thank you, bro. I appreciate you guys. Okay, so are we ready to learn about something for the next 30 minutes? And then we get back into what we normally do here. So I understand that securities will be moving while I'm doing this. I kind of want to just focus on this, get it out of the way, and then we can get back. But if you guys are trading on the side, you guys are doing your own thing, that's fantastic. But if you can just pay a little attention to what's going on here while you're doing your work on the side, then maybe we can learn something together. Okay. I know that you guys are getting to the point where you can kind of trade on the side. Listen, that's how I am. Sometimes when I'm trading by myself, I got some music on in the background. I got the news over there, but I'm doing my thing, and then I'm multitasking. So you guys are going to start to learn how to do that too. It's going to become part of your daily routine. Okay, so let me just hit the record. Let's learn something for a Friday, and maybe we can have something for the weekend.
Recording in progress.
Okay, welcome guys, welcome to SST. This is one of we're calling this series Nothing But Nuggets. Okay, so Nothing But Nuggets series, these are going to be quick little nuggets we're going to give out, and they are free nuggets for you guys on YouTube, and also we'll do these as we get into the rhythm with these. We'll be doing these more private with you guys on Zoom. Okay, so this is just my first one. I want to see if I can handle this. And I talk a lot, guys. I'm sorry, I talk a lot. So I can stretch something into 1 hour, 2 hours, 6 hours. So I got to learn how to be a little bit more efficient with my time, so I can respect your guys' time too. Maybe I can bang out like a 2-hour webinar, what I would normally do maybe in 30 minutes, so that when you guys are watching it, it's condensed, it's to the point, and then we continue to go from there, because we already have enough 2-hour, 3-hour webinars in our other series. Okay, so these are going to be shorter ones, but let's get into it. The focus is trading securities at all-time highs. All-time high, ATH, is an abbreviation. Get to know this abbreviation, ATH, if you ever see this. This is abbreviated for all-time high. The focus of today is gold, XAU, USD. You guys know the ticker. So remember, trading securities at all-time highs. This webinar can be basically for any security trading at all-time highs, whether it's NASDAQ, Dow, whether it's NVIDIA, whether it's Bitcoin, whatever it is. Okay, so all-time highs, but specifically this one will be talking about gold, because gold is trading in all-time highs. You can see right over here, we got a big demand zone on the weekly. This right over here, this yellow line, 2,785 was the previous all-time high just before Halloween, October 31st of 2024. And you can see right over here, the end of January, early February, we closed with green volume above, and we started to move above here. So this previous all-time high is turning into is support level now, demand. So I have the bigger block down here. What I would do is, now that I see this block over here formed with the volume closed above, that would be my new higher low demand area. If gold pulls back, I'd like to see buyers step in here, and this one is pending down here, okay? But now we're trading at this all-time high supply. This is the highest point gold has ever traded in its history. It's almost 3,000 an ounce. Maybe you'll see futures is trading up there, but this is more Forex. So futures also, they're trading in the future months ahead. So there could be, you might see next week 3,000 contracts coming in. We came up there. That was an all-time high, February 11, and it got rejected. We came in there again, February 14, and it got rejected with big, heavy red volume. Gold came back up, didn't lose any support structure and to signify a selling pressure off the all-time high. It's still building, and we came in there this week. There's the new all-time high, 29.55, and you can see how the volume is still trading below this red block. If it continues to push down, it could come down to that trend line that is starting this entire all-time high parabolic move, and we'll see next week if it can break the trend line and drop a little bit. This is where I would place a point of interest on the daily right there. That's the neckline of the daily, where it came up, down, back up, and we're going to see if it can come back down, break the trend line, break this point of interest, maybe close below there, and then gold might start to sell off to this block. But right now, we could definitely continue to break out of here, and what happens next? Then we're trading in price discovery where we've never been before. So now I just want to lead us over, guys, to a quick little, I'm going to do like a flip-flop from TradingView to this, and I want us to learn a little bit. Okay, so trading securities at all-time highs. The focus was on gold. Let's continue here. In financial markets, all-time highs often provoke a sense of excitement coupled with anxiety among investors or traders. How many of you guys have traded at all-time highs and maybe you've been anxious or scared to take trades at all-time highs, or you're just extra cautious? It's okay. It's normal. All traders and investors go through this, myself included. Sometimes I don't want to buy at all-time highs because I'm always thinking that a big supplier is there and is going to dump the market down. So that's why I wait for confirmations as much as I can. If I'm speculating to take a trade in an all-time high with no confirmation, I reduce my risk because I know that there could be a big seller there that's going to drop the market. So you just got to proceed with caution, okay? And then for commodities like gold, which is traditionally seen as a safe haven, okay? That's what gold is traditionally seen. It's a precious metal. Whenever there's craziness going on around the world, whether there's pandemics, there's wars, there's new governments, there's fiat currency inflation, there's all kinds of things going on, gold has always been history to go in there, and it's safe, it's sound, okay? Trading at all-time highs draws particular attention due to its unique characteristics as both a hedge against inflation, what I was just talking about, and a speculative asset. This analysis aims to explore the implications of trading gold at all-time highs, the market dynamics involved, and potential investment or strategies, okay? So understand gold as an asset class. We need to understand what we're trading. Get to know our security for everything we're trading. Number one, gold has long been regarded as a valuable asset, historically used as currency and a store of value. In modern finance, it serves several roles. Inflation hedge. You are probably going to see in the US right now, we got a little forward guidance from Walmart yesterday. They were saying that inflation is increasing. It's costing them profit, and they see it for 2025, and they don't see inflation going down. They are kind of giving guidance that it is going to go up. So gold is an inflation hedge. Investors flock to gold during inflationary periods because in inflation periods, their money is losing value over that inflation period. So it's better to take your money and put it in a precious metal or a store of value that could hedge against the depreciation of the dollar, and then you're going to gain on the demand of gold and the appreciation of gold, as it tends to retain value when fiat currencies decline. We're seeing that around the world, not just in the US, not just in Canada where we're from. We're seeing this globally around the world, in the UK and all over the place, okay? So currencies, fiat currencies are in decline right now. So it's also seen as a safe haven. During geopolitical uncertainties or economic downturns, gold often appreciates as investors seek security over here. Diversification tool. As a non-correlated asset, gold can help diversify investment portfolios, providing stability amidst immense volatility in equities and bonds. Okay, so we have market dynamics at all-time highs. Trading at all-time highs can introduce both opportunities and challenges for investors. There's psychological factors. FOMO. How many of us fear of missing out? This not just for all-time high trading, but this could be in the next trade you're about to take right now. This could be in the next scalp. This could be in your next swing trade. FOMO, fear of missing out. Investors may feel compelled to buy gold at all-time highs, fearing that prices will climb further. Okay, so this is where some patience has to come in the market. I know that gold could possibly go more higher than 3,000 and test 3,100, 32, maybe possibly 3,500, but do I want to buy the all-time high breakout? Because if it sells off, that's that thing where if you patiently wait for it to come to one of those bigger green blocks on the weekly, you could get in at a discount with minimal to no drawdown and then take it back up to the next resistance while you're in profit. So that's where the FOMO, and you got to learn this yourselves, guys. It's very, very hard to teach fear of missing out. This is something that you're going to learn. If you've been burned in the past by taking breakout trades, that's that FOMO. You're fearing of missing out on the potential run. And if you get burned out or stopped out, then you got to learn how to fix this. Okay, it takes time, and that's why I take speculative trades. If I'm going on breakouts, if I'm going trading in all-time highs, because I don't know what's going to happen up there until that particular time frame has closed up there. Okay, fear and uncertainty. High prices might lead potential investors to avoid gold, believing it is overvalued, which can dampen demand. So right now, maybe if investors and things like that think that gold is overvalued up here, then it's going to start to diminish the demand. And then if there's a big seller that wants to kind of maybe take some profit out of the market and sees that the demand is weakening, it's a perfect time for a big supplier to come in the market and start to drop that supply. Okay, so we gotta understand. We cannot have our longs or the bulls losing their valuation for gold where it is. We need them to continue to buy up here to push it. So there's momentum trading. Momentum trading. When prices reach new highs, momentum traders may enter the market, driving prices higher based on the expectation of continued upward movement. So we don't just have technical traders, we have momentum traders that are kind of wave traders, and they trade the wave of the market. So if there's a move breaking out, they're trading with that momentum. They're adding that demand, they're adding that volume. So you got to also look that there's momentum traders who are looking to trade these breakouts. Profit taking, as I was just mentioning. Conversely, current holders may choose to exit positions to capitalize on gains, leading to increased selling pressure that could trigger volatility. Okay, so what I was just talking about over here, guys, I'm just going to go back to the chart here. And so this is what I was talking about. If we are trading at the all-time high, there could be momentum traders that continue to drive it out of here, or there could be breakout traders. But this is all speculation if it comes up here. We don't know where it could go. Okay, so it could just come up here and then encounter a big supplier and then get rejected with a wick and then close back down below this block, and then you're closing below the trend line as well. So that could signal maybe a reversal in the market. You could see that they come up through here, take out that all-time high supply, that pending orders that are up there, and that eliminates everybody up there. Whether you are you're a buyer that wants to buy higher, like you're a momentum trader, you will get triggered there. You could be the sellers up here. You're also going to get, so it triggers all of that liquidity up there, and then we figure out where it's going to go. However, it could just come up there as well, break out, be a big green candle with a small wick, but come back down, close with green volume above here, and then it could be testing this block. If we get green volume closing above here, what I do is I flip the box back to green. And then what I'm looking for is a possible change in the depth of market, where now this block starts to get filled up with demand or buyers. So it breaks through, closes above, and then I'm looking for a retest here. And then I'm still pulling back to the natural trend line in the demand box, and that's where I'd like to see the buyers step in, and that's where it might be that pullback buy, but at least you're buying in confirmation in demand, much better than just buying a breakout trade when you have no idea where it could go. And then maybe this leg has enough volume to come back to the next all-time high, the new higher high, and break it out and go into new charted territory. Okay, so this is what we do have to watch up here, and I'm on the daily, so you have to watch a daily candle if you're a daily trader to see if daily volume closes up here. If you're a 4-hour trader, you got to go into your 4-hour, and you basically have to watch when a 4-hour candle will close above here. Right now you see the highest point, and the 4-hour candles are making lower highs off that all-time high supply. If you're an hourly trader, 15-minute trader, 5-minute trader, you have to go in your time frame that you feel comfortable trading. Okay, so just going back over here to the presentation real quick. So economic indicators influencing gold prices. Several macroeconomic factors influence gold prices, making the assessment of gold trading at all-time highs more complex. Interest rates. Okay, we're going to get this now. We're going to have an FOMC meeting coming up in March. We're going to figure out what's going on there. So gold does not yield interest or dividends. Thus, higher interest rates may lead to a preference for interest-bearing assets over gold. Conversely, low interest rates typically bolster gold prices. So if interest rates start going up, I don't get like any interest back if I'm holding gold. It doesn't give me any dividends. Then I might, if I'm holding gold and I see that interest rates are going up and I see that there's more dividend paying securities or higher interest securities, I might want to move over and sell my gold and move over there. So interest rates can affect the way how gold, the demand and the supply of gold as well. The dollar strength. Some of you guys are always trading maybe gold alongside DXY, the US dollar index, to see how it's trading. It's some traders say it's correlated, where if the dollar is strong, gold is selling, or conversely, if the dollar is weak, gold is appreciating. So gold is inversely correlated with the US dollar. That's how it trades against. Your ticker is XAU/USD. A weakening dollar often drives gold prices higher. So we could see if they're selling the dollar, then think about it. Just think about it. If the dollar is selling, someone is profiting off of that sell. And this is the way how I always look at the markets. I've always looked at this since I was younger. If the dollar is selling, someone has to be selling it. And normally someone who's selling it is in profit. Maybe the demand is dying off and now they want to realize their gains. So they got to sell it and then buy it back at a lower price. So if they're selling while it's going down and then they close it, they might take that profit and then move it over into gold, or vice versa. Okay, so you got to think of investors or bankers, how they trade as well. You also have geopolitical instability. Events such as conflicts or financial crisis can heighten demand for gold, increasing prices. We've seen that go back to just the last 4 or 5 years. When the pandemic started, look at the gold prices. They were driving. When you had all of the political stuff around the world with the Middle East and Ukraine and Russia, look at gold prices. They were driving. If you see right now today, look around you, what's going on there's a lot of tension around the world. Gold is sitting at all-time highs. Okay, maybe once everything gets peaceful around the world, we have peace everywhere, we got stability around the world, then you might see gold selling off, and then those profits are going to move into another asset class. Okay, so we got to understand where the volume, where it can move. You have to actually follow the money when you're trading. Okay, current market sentiment and trends. Analyzing market sentiment is crucial when gold trades at all-time highs. So some key aspects. Investor sentiment indicators. There is these type of indicators available, some with fees, because these are more of a higher end tools. So tools such as the Commitment of Traders, COT report. This is Excuse me, this is available for everybody. It's the COT report. So this is the Commitment of Traders report. And it says sentiment surveys can provide insights into bullish or bearish sentiments among traders. Extreme bullish sentiment could signal a potential correction. Inflationary pressures. In recent years, central banks worldwide have engaged in unprecedented monetary easing. If inflation continues to rise amid regulatory tightening, demand for gold may remain robust. Okay, so we got to listen to what Powell is saying in the next FOMCs. Not just look for that Fed cut or raise or pause and then just we trade the 1 minutes. That's what we normally do. But I scalp that news, but then right away, when the day is over, I go listen to exactly what Powell is saying. I like to listen to everyone's forward guidance because I like trading into the future. I'm trading in the present right now when they release the news, but I want to know what's going on. What are they saying? That's why Walmart was key to listen to forward guidance. If we have NVIDIA earnings coming up in the next little bit. Listen to the guidance for all your companies. If Tesla's reporting, listen to Elon Musk's guidance. If you're trading United Health, like listen to the guidance. What's going on? Like the Department of Justice is investigating them. So I want to hear their side of the story and things like that because that could affect the share price of United Health. In 2009, it was a $10 security. And it's not too long ago, 15 years, to appreciate that much. I want to know a little bit more about it because I trade the Dow Jones. So investors may carefully consider their approach when trading gold at all-time highs. Options may include. So these are some strategies when you're trading. Scaling in and out. Rather than making a single large investment, consider incrementally entering or exiting positions to manage risk effectively. Diversification. To mitigate potential losses, maintain a diversified portfolio that includes gold alongside other asset classes. So it's not good, in my opinion, to put all your eggs in one basket. It's nice to diversify your portfolio. So if you have a little bit of gold, you could be now accumulating a little gold to hedge against the US dollar. So it's kind of bankers, institutions do this, governments do this. So why are you and I not doing this? Okay, so we can do this. At your local financial institution, your bank, you can go in there and you can buy ounces of gold. You can buy fractional sizes and things like that. You can store them there if you trust your banks in the safety deposit box and hold it when we do have situations like this in our economy. Hedging. It's a great hedging strategy. Use options or futures to hedge against price declines if significant positions in gold are held. Technical analysis. Employ technical indicators such as moving averages. Some of you guys use your 200, your 50, your 21, or your 9 moving average and follow those. Is the volume closing above those moving averages? It would continue to move bullish. Is the volume closing below those moving averages? Then maybe sentiment is moving bearish and it looks like sellers could be stepping in the market. Your RSI and your Fibonacci retracement levels to identify potential resistance and support areas. So we try to teach you guys with price action how to locate your resistance areas, your support areas, your supply zones, your demand zones. Also, you can use the Fibonacci retracement tool to just figure out where the swing low to the swing high is or the swing high to the swing low. It will automatically compute every single level within that range, and it will also show you where's exactly 50%, and then one notch above, one notch below is your one standard deviation above or below. It's either your 382 or your 618 or vice versa, depending if you swung low to high or high to low, and that's basically your golden zone. Okay, so that's where we want to trade off of. If you can patiently wait to trade off of there, you have a higher probability of success in the markets than just taking trades anywhere in the markets. Okay. Finally, we have to also consider risks and considerations. Okay, investing or trading gold at all-time highs is not without risks. We all know this. Market corrections tend to happen. The potential for significant price correction exists. Right now, it's consolidating. If we go back to the charts right over here, I can show you. We are consolidating right at the all-time high supply. Sorry, this is not a green box. Let me just make it right here. Let me just get rid of this. Okay, so we are now, like this entire consolidation. This is our all-time high supply, and then that's our daily point of interest. So the volume inside here is still accumulating. There's a lot of accumulation because look at the size of the zone. But you can see we had a green 2 days, and then it came back down into here. No red volume closing below our point of interest. The buyers were interested. They brought it right back up. Couldn't take it out any higher, followed by a big red candle. We moved again the start of this week, came right back, and we've just been trading in here. The buyers are buying in there, but you can see that they're getting exhausted. Look at the volume of the candlesticks now. Look how thin this one is. This is thin volume compared to these bigger volume-based candles. So right now this is telling me volume on the daily is getting exhausted on both sides. Sellers are getting exhausted, buyers are getting exhausted. So we've been the last 3 days just consolidating right at the all-time high, right at the end of the week. So I kind of want to follow this daily candle in the next 5 hours, see if it's going to close red near the low. Will the buyers bring it up, close it at the all-time high, and then next week we open. It could be a gap up breakout depending if something happens this weekend, or we could start to move our way down in here, and it could be starting to break and lose its momentum going into next week. Okay, so we do have to follow this, but right now look at how tighter it's really consolidating right here. Okay, so you see the entire zone, but you can see we're consolidating right here, and we are still above 50% of this daily candle on Tuesday. So it's still holding 50%. So are we flagging, just losing volume, losing interest right now until we start next week, and then maybe they're going to continue breaking it out? Okay. Okay, so market corrections, we talked about that. Potential for significant price corrections exists. Historical patterns show that assets reaching new highs often undergo retracements. This is not true all the time, but just be careful, because when things are trading at all-time highs, then it might sell off. We've seen it when Bitcoin hit all-time high 109, 110,000, and since then it dropped down to 90, 92, and it came back up to 98, 102 in there, and it's just consolidating right now at 98,000, right underneath 100,000. So will Bitcoin continue to drive to that new all-time high, or is it going to come back, retrace, or is it just consolidating? So this is how you can look at these assets when they're trading at all-time highs. But also when we're coming back up to that all-time high, look at how the volume has accumulated from the bottom. Is the depth of market really building? Then it can give you confluence, it can give you conviction that we're going to continue driving for a new all-time high with momentum. So it's all how both sides are building. So liquidity issues. A lot of you guys are learning now what is liquidity in the market. So during market downturns, liquidity might dry up. We're seeing it right now, how the liquidity is drying up on gold, resulting in wider bid-ask spreads and difficulty executing trades at desired places. So we don't want volume liquidity to start drying up here. So then they got to start to pick up the volume, and I don't see it up there on gold for the last 3 days. The volume is really dying off. Alternatives. Stay informed about emerging alternatives to gold, such as cryptocurrencies, Bitcoin, and other commodities. Crude oil, looking at crude oil where it's at, or other precious metals. Silver, guys. Silver, if you don't know, silver was trading years back at $15 an ounce. Then for like 10 years it was in consolidation from $23 to $30. Had a 10-year consolidation in that range, and now we finally broke out silver, new all-time high, $32, $33 an ounce. Silver hasn't had the run that gold's had. Silver's just sitting there. You know, it's nobody really enjoys silver, but silver has room to move to $40, $50, $60 an ounce. It just takes longer than gold. Gold has the spotlight, but silver, platinum, it's palladium, those are other, copper, all of these things. A lot of traders, investors neglect those because everyone's just focused on gold. So look at your alternatives too. There's a lot out there. Okay, so real quick, guys, thank you guys. Just to conclude this, trading gold at all-time highs presents both opportunities and challenges for investors and traders like you and I. It requires a keen understanding of market dynamics, economic indicators, and investor sentiment. By adopting sound investment strategies and managing risk proactively, investors can navigate the complexities of investing in gold during this unique market condition. While gold remains a popular hedge against economic uncertainty, careful consideration is paramount to capitalizing on its price movements responsibly. Okay, so guys, I hope maybe you guys know all this stuff. Maybe you learned something. I hope you guys did. That was, I think it was under 30 minutes. I hope maybe 25 minutes, but hopefully we learned something right there. And now we can get back to doing what we normally do. Okay, so guys, let's get started. Welcome. How's everybody doing? Can I just grab a drink real quick because I talked really, really fast there. Okay, so are we ready, guys, to get started? Did we learn something? Do you guys now see how the volume is kind of tapering off up here? Okay, that was kind of part of the webinar, what I was just talking about. It's watching to see if the volume is starting to fizzle off over here. Guys, are we good? No one is responding. Hopefully that you guys are still here. Okay, I'm going to go. No one wants to talk to me, no worries. Let's continue going here. So I'm going to finish off charting gold, and then we're going to look at NASDAQ, and we'll look at US 30, but let's get started here. Okay, so we know that this is the all-time high. I'll keep it how it is, this chart, how it is, but let's now start to just dissect today's trading volume on gold. So we closed right here yesterday. We opened green. So where's our point of interest today? Let's continue. Let's do this. Guys, hopefully you guys can have this done before we get into these sessions, and then we're doing this together. Okay, if not, if you're learning, you got to learn fast with me. You got to continue watching what I'm doing. So it closed here, it opened right here. We initially we were bullish. Do you remember in the Tokyo session where it jumped like 100 pips? Around 7, 8, 9 o'clock. That was during Trump's speech. And not only that, do you guys know that Canada beat USA in hockey for the gold medal match? Oh, it felt so good. So, oh my God. Did anybody watch that hockey game, the Four Nations? It was good. It was a good game. Exciting. But Canada, you can't beat us in hockey. I'm sorry. It was a good try from the Americans. I respect that, but you can't beat us in hockey. Come on. So it came up green, green, green. Let's again figure out the high of that candle. Purple line. Now, technicals, price action. Is this wick higher than that all-time high wick? The answer is no. That's the answer, okay? There's no debate about it, okay? Let me just get rid of this. It's lower. You can see it's lower. So what they're doing is, right here, this is telling me they are lowering the supply. Right there. They did that as of last night and today. See here? They lowered it because it came traded right into there and they rejected it back down, okay? So that is going across. And since then, we came all the way back down, red, 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 where we opened, and it continued red. The selling pressure continued. It even broke yesterday's open and continued to push red where it broke yesterday's low, and it continued to push down where it broke Wednesday's low, and it came all the way down to right there. Okay, so that is our low of the day. Purple line. And do you see how conveniently it is right around 50% of Tuesday's candle? Okay, right? If I was just guessing from the opening price to the closing price, I would assume 50% is somewhere in here. If I want to be as accurate as possible, again, what we're teaching, get your Fibonacci tool from the open to the close, open to the close. Look at 0.5. Look at this, guys. Did anybody do this? You could have bought today's bottom with precision if you just took 5 minutes to do this. This morning, yesterday, just prepared yourself. Siobhan, 50% on the dot. This is that one where I say it's on the dot. I don't like when I say that, price-wise, I'm talking to the decimal, to the pipette. Like, it doesn't get any more accurate than this, guys. Please, if you're sleeping on the other end, wake up, wake up. It's time to wake up, guys, and understand here. I know maybe that webinar that I just did, the first 30 minutes, was completely boring and you guys were falling asleep there. But now, this is the real webinar. Wake up now. I want to teach you guys this so that I don't want you to say, oh, Ron, I missed that. I'm going to ask you, why the hell did you miss this? Did you not just do what we're telling you to do here? Just do this. If you don't know how to pinpoint that exact, I tell you guys on live calls, it doesn't always hit exactly right in there. It might hit the top, that level, or the bottom one. But if you acknowledge the box, that's it. You've done your work. You've done your analysis. Now stretch it. See how it came in there right today? What about Sunday, Monday night? What about Tuesday? What about Wednesday? What about Thursday, Friday of next week? Stretch it into the future, okay? Guys, I need to know, please, guys, tell me right now, do you guys understand what I mean by this or how I figured that out? I know someone is going to be a smartass and say, well, Ron, I can see that. It's easy. We've been doing this for 5 years, okay, for 5 years on YouTube. We've been doing this for 20 years in our personal lives. And I have back tested this for you. Dave has back tested this for you for 20 years. We are your leading indicator to tell you that this shit is accurate. Just learn how to do this, please. And understand while you're learning this, it's not 100% guaranteed. Okay, you got to understand how the markets work. If this was 100% guaranteed, I would be the first one here to tell you this is 100% guaranteed. But something will happen in this zone. Why? Because it's the fair value. It's the discount. It's the pullback. It's buying something at 50% off. Well, if I go to Walmart tonight, I got to go. I got to buy some shit there. If I can buy something that it's 50% off and last week I normally pay regular price for it, I'm a happy person. I'm going to go in there. You're going to see me come out with a smile. I might even buy 2 of them if I need them. Like anything we buy at discount, that's what buyers are looking for. Sellers are looking to sell at premium areas. So you see these sellers right here today, they sold at premium. Okay? They didn't sell down here. That doesn't make any sense. That's where the buyers are. If they sold down there, they're in drawdown. These smart sellers sold in supply. And they sold at a nice psychological number. Look at that purple line. $2,949.79. That's that Walmart rollback price. Okay? Discount. They don't want to show you $2,950 because psychologically, when you see 49, I'm getting it cheaper. I'm getting a discount. That's the way how this market plays games with you psychologically. Same with when you go shopping. Look at the Walmart prices. You might not ever see $25 for something. You'll see $24.99. You'll see $24.97. You'll see shit like that. It plays us as human beings, psychological pricing and marketing. Same thing here. We're in an auction market. More transactions, efficiency happens at these levels. Okay, so let's continue. We came down here. Buyers were present. 50% of this candle. You guys know that. If this was 5 minutes, if this was not daily candles and this was 5 minutes, if I get rid of this watermark, this could be a 5-minute setup. Same thing. All candles have the characteristics. If this was a 5-minute bullish candle, I would have located 50% of it right away. And if I didn't buy the high in the supply up there, I waited for maybe a pullback of that 5-minute candle coming here. Maybe I'm entering here. And then as it's coming up to there, I may be up 10, 15, 20 pips, and that's perfect for a quick little scalp. Okay? But these daily traders that are buying in here, they're not looking for just a little scalp. They're looking to continue to take this thing up, trade back in the supply, and they're looking for a potential breakout next week on momentum. Breakout, come back, probably retest this, and then these buyers that were in here, they're probably going to start putting more pending orders to protect their position. They're already in here, so they probably want to protect it. So this is where they probably will put more orders in to absorb that pullback and continue to drive it with the next wave up. So that's why they right now, they're pushing the volume right back up almost to where we opened today. So let's continue now. breaking down this by dissecting it and going into the hourly. Before I move on, can you guys hit the likes on YouTube? Subscribe to the channel if you learned something new with our webinar that we started, or you just learned something right there that I just talked about. Guys on Zoom, let me know in the chat. You guys are good with this? Understand this. All time frames, you understand this principle, your trading will change, I promise you. Okay, let's go to the hourly now. All good, Ephraim? My man. Good job, guys. Okay, so now hourly. Hourly has structure. Hourly has big wick candles. Look at the time when it happened. Look at this was futures market open 8 p.m. I told you when Trump was speaking and the Canada-US hockey game, it jumped 100 pips. This was from 29.40 green. It hit that purple right there, 29.50, 100 pips, and they slammed it down. And look at, they closed it down with authority down there. But then it came right back up. Again, follow the wicks, lower high, lower high. We continue push right back down. When did we hit the bottom low of the day? London. Okay, so get to know your sessions, guys. 3 a.m. came back, you know, it traded in that big block right there. Look at it, that green block. 50% right there, right in the middle, okay? And it came right back up to here. Look at when we came down today, 10 a.m., okay? So the buyers are there on the hourly. They brought it right back up. And you see how we opened? See those wicks? So right now, I can see where there's an hourly structure in the market right here. I place a white line. Hopefully some of you guys did this. Why did I place it right here? Look at it visually. I got a body. Here, yeah, that was just a fake break. They took out the low, they grabbed the liquidity down there, brought it right back up, and then next hour closed again above that white line. So that look to me, that move right there is a liquidity grab. Second bottom. Here was the first bottom. There's the second one. And then they brought it. Look at the volume again. Closing right there, white line. Opening right there. Retesting white line. Retesting white line. Here again, maybe they saw some pending orders down there still waiting. They came down there again aggressively, grabbed those orders, grabbed that bag, produced a higher low at the green box, building the depth of market, came right back up, and then look at the momentum of the next hourly candle. Off of that big rejection, it's now a green engulfing candle. It cannot break this yellow line, this point of interest. They're pushing down, but the volume is still building. This candle will engulf all of this shit to the left. Okay, so it's going to close in about 12, 13 minutes. We got to follow this. And what I'm also seeing, a big green body candle. So if I'm an hourly trader, I'm watching where it closes, and right away I'm going to figure out where 50% of it is. Potentially right there. If it closes right now, that's where 50% is. I would have another white line right there. In case it pulls back, I might be wanting to buy with that hourly volume in that body of that candle. Okay, but it's going to see how this thing closes. So right now, if it ever comes back down here today or tomorrow, 19, 28, 27, this might be a potential area to buy, okay? Because I can see how long it's really held there. And then it's getting rejected out of there, okay? So, and then if I look at the hourly trend, what is going on? Like from the top up here, from 29.55, maybe we look at the trend. Okay, we can do a natural trend line. What I mean by natural is this was the natural trend line. Then I see it come up there. I see where it spiked it right there. That was futures, 8 p.m. And then they brought it right back down. See how the volume is still below that yellow natural trend line. And then right here I see a fake breakout, fake breakout, fake breakout. Here's some green volume closed above, came back down. So see now the volume is now still above this natural trend line. I can do another one like this and just, I see traders place it. Well, Ron, why didn't you just place it at that wick and do it like that? You can. It's called like a fan. You can have a fanned trend line. So this one is showing me that. So when we're coming up right now, like if it comes up here, that's this bigger trend line up there. Okay, so I'll keep both of them like that. I'll place white lines on them because yellow represents daily, so I'm on the hourly. So this is more representing like my hourly trend if I need to have trend lines. Trend is your friend, okay? So don't neglect that. And then now what we can do is I'm going to bring it to the 5 minutes today. We can watch the fives and just take a look at what's going on here so that I can do NASDAQ and I can do US 30. But over here, okay, so now on the 5 minutes, remember this neutral area. That's that entire hourly consolidated area. Maybe I can get rid of it so that we focus more in here. This is our big supply up here. This is the demand down here. Now I can see how the 5-minute candles traded in there. I can see exactly it hit the low, hit London was 3:20 a.m. So 20 minutes after London market opened up. I can see that's when it started to reverse out of there. I can look now exactly what at 8:20 what happened during COMEX. Here's 8:20. COMEX was red, came down, closed as a strong hammer candle, but couldn't fake breakout, couldn't take out that, and then they slammed it back down. Now I can go right into 9:30 Wall Street markets reaction. 9:30 they sold it off and brought it right back down, and then up at 9:45 and all the way back down, and now we're coming all the way back up. Do we have some areas or of reference on the 5 minutes? Yeah, we do. We got a little zone right here. Here I would kind of caught that. I would have caught that, bringing it across, caught that, caught that. Okay, so then I would make that entire zone on the 5 minutes like a red zone, and then I can see the fake breakout at 9:45 that came to that daily point of interest, and they dropped it right back down. This is where you could have looked for a sell. Volume closed below, retest it again, back down, retest it a second time. You could have sold this bar, place your stop loss either above the red box or above that yellow point line, and then you could have been part of that big drop right there. And that could have been maybe your daily goal for the day. If you're measuring a move like that and you're waiting patiently for that move, coming down there is 50, 60 pips to the white line. Normally I do something there, but the official move came down 120, 130 pips down there. And then it's picking right back up. So stretch this zone across, and you see now how we're consolidating right above it. I make that like a 5-minute green zone. So I'm not looking for any sells unless we can break and close below this, and I can make this box red similar to like over here, and maybe I can get that leg coming back down there, or we're going to start to break out into here. So right now on the 5 minutes, we are kind of consolidating right below that daily yellow point of interest line and above this 5-minute block. So it's neutral right here. And we're going to see if we can continue to break out. If we do start to trade and break out in this big red box up here, where could we potentially go? Well, look at the last time the 5-minute volume traded in here. It was Thursday. That right there's futures market open when it started to pump, and then it dumped down. Here was one prior area right here. See that wick where it touched right there and back down? I can bring that down to the bodies if I like, right there. And then I can see maybe, but what I want to do is see where I manipulate it. Normally I would keep it down at the bodies, but what I can see is that big red candle. I want to base it off of that big red candle. If I'm looking at 50% of that red candle at 8:35 p.m. Eastern, it matches up with that high wick. So this is how I set my own lines. So I can see right there 50% of that big red candle right there, cut it in half, and then it touches exactly that rejection wick right there. So it lines up with my trend line right there. So if we do get buyers this afternoon breaking out of here, that could be like where it gets rejected right there. And if I'm taking that buy, let me just get rid of this big all-time high supply to not confuse you. Okay, so if we start to break out of there, what I do is, as a scalper, I measure from the yellow line to that red line. That is 40 pips. If I get a green move filling in there, that's 40 pips. I'm happy as a scalper. Number one thing I'm doing is taking my stop loss, putting it to break even, and when it's going up, hopefully right up to there, I'm either closing the entire trade and I'm happy with 30, 40 pips and move on with my day, or I can close out 50, 60, 70, 80% up there and happy with that, and then leave 20% running if it continues to drive and my runner will bank for me, or I can continue to trade with the runner. But because when it comes up there, there is a high probability that a seller can reject it back down. They're selling at premium and selling it back down. So me as a buyer, I want to shake the seller's hand and say, here, you can, I want to close my trade, my long buy from here to there, close it with you. Thank you. I will get my money. You now have my position. And then when you sell it back down to me down here, they need to find a buyer. I am there waiting to shake their hand. I will gladly buy it off of them. They can realize their profits, and then I'm buying again at support at a discount. Does that make sense, guys? This is when you trade, it's transaction with a partner. So when I'm trading up here, I'm trading with, I got to find where the seller is, and I got to exchange it with them. I accept my profits. And then when they're selling it, they have it down. Their objective is to sell it back down to here so that a new buyer can buy it. They realize their profit. However, if they're selling here, they're placing their stop loss above here. But if it keeps driving and driving and driving, that seller who sold there is in drawdown because they wanted the market to come down to here, right? So now we're going after, so if I have a runner or we break out of there, this is where it's not 40 pips. It starts going up 50, 60, 70 pips because now we're coming after all the pending orders up there, okay? So if we break a resistance, like over here, you see how it broke this resistance and it continued driving. I guarantee you all of these sellers, their stops were up here. And it came cut right through there to that nice psychological area and the high of the day, and then they dropped it down. The bigger seller was waiting up here, right? Selling at a premium as opposed to selling inside here. Okay, the big seller are at the blocks. The big buyers are at the bigger blocks. Okay, these are just minor blocks. Okay, this one is a 5-minute block. It won't hold as much truth to this bigger one down here because this one has been tried, tested for multiple days. It's a demand block on the daily. Okay, so let's just continue with what we're doing here. So right now it's green, red, consolidating. Okay, so but could it be building the second top? Do you guys see a second top formation? Okay, if this was the first top, we came all the way down. There's like the lowest neckline, but I would say that this area is more the neckline. And see how we came back up? Now that's the second top. There's one top, there's two tops, there's your M. And now we're looking for it to push down. You could get a impulse red break, but then remember you're trading where the buyers are waiting. So we're looking to break a red candle, close below there because we assume buyers will buy it right back up. And then when it closes there, they're trading back into this zone, but we make it red because that's where now the lower time sellers are waiting to absorb those buyers and then reject it back down and then take it down to this neckline. If it can possibly break more, we do have the structure exactly where it could go. Okay, so that could be that path, right? So if it is going to break down, again, I measure it before I take a trade. So I measure from the green box all the way down to that white line. Again, that's 60 pips. Will it come all the way down there? Do you guys see there was a little bit of structure on the 5 minutes right here? Right there, there's those two tweezer top highs and the body. So on this run where it came up, it stopped right there. Seller said, we're bringing it right back down. And then it came right back up and then it pushed. There's the closing of that red line. There's the ignited green candle and continued to drive. If the sellers bring it down, 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 it could stop right there because this was prior resistance on the 5 minutes. 5-minute support could be right there. So if the drop is only down to that red line, I know it's worth 30 pips. 30. Just if it breaks from here down to there, 30. The extension, if we break that support, then we drop to that hourly support. Could be a 60 pip move. But I go from one line to the next. As it's coming down, I judge the momentum to see if it can break, hold there. If I've already made up my mind, I'm okay with 30 pips. That's what it is. That's that trade. I took the trade from here down to this next level, and I'm okay with that. My next thing is, if I'm taking that trade, like if I'm going in a sell position, it automatically, first thing I'm doing is when I click a sell, I'm in a sell. There's nothing I can do. The next thing I got to do is manage my risk. So it's my stop loss. Where do I want to place this stop loss? Do I want to place it maybe 50% of that red body if it continues to hold down? That's my risk on that trade. If I want to give it more room to breathe, like above 5 minute, right up there, or just right above that yellow line, you see that my reward is 0.8. I'm not even getting a 1-to-1 on my money if I do that. Especially if I'm looking for that, that's not the greatest risk to reward. I'm only looking for, I'm going to bet $1 to make 50 cents. It's not right. So if I increase my stop loss, then I'm going to hold the position longer to continue to break this shorter term level. And then my risk goes from betting $1 to make $1.20, a little bit better. But then we judge what happens at the hourly. If it continues to break, we could push down where? Maybe all the way back down to the green box. But you see where there's a 5 minute level right here. Right there. Maybe down to there. And then that's it. Then the buyers step in and then they start protecting this depth of market and then reverse it back up. Okay. So the larger my stop, I'm looking for a bigger move. However, if it starts to start pushing down, then what I'm doing is I'm reducing my stop loss as much as I can while I'm in profit to get it to a break even, and then I have no capital at risk. Again, you guys have probably seen the start of this week, a couple trades came back and hit break even, but that's if you want to learn how to protect your capital. You gotta start to incorporate that in your trading style and learn from it. Okay. Sometimes when you're scalping, you might get a trade that goes right into, just drops. You go into a sell, it just starts coming down red automatically, and you haven't even encountered any drawdown because you're trading on that momentum and it drops. Sometimes like that, when it's coming down, I just go really quickly to a break even, and then it's in 10, 15, 20, 30 pip profit, and then I'm just scaling out of it. Okay, that's how normally I scalp, is real quick on the 1 minutes, so, but I'm trying to slow this down for you guys on the 5s. Okay, so have we broke down here? No, it came down. Again, it's respecting this box and coming right back up. So we're going to now judge what happens up here or down here. It might just continue to trade inside here. Okay. Do you guys understand? Is that good? If I move to check out US 30, I want to talk about US 30, then I'll get to NASDAQ. Are we okay with this right now? Let's do NASDAQ actually, and then I'll do US 30 by itself. So NASDAQ, this is the 5 minutes. Holy shit, what a drop, guys. Wow. Okay, so let's look on the daily, and I'm going to do this a little faster, guys, okay, because I want you guys to get in the habit of Ron doing this a little bit faster. Okay, so this is NASDAQ on the daily. Let's take a look at what's going on here. So do we have an all-time high supply? This was the previous all-time high supply. Okay, we just did a quick little webinar on trading at all-time high supplies. Stretch it across. So I can see it did close above that all-time high supply. And then if I move that red box green, I see it coming back down red, green, go back up. So I can see the new all-time high is right there. Okay, but look at the volume that traded above the all-time highs, guys. Okay, so remember what I was saying. If the volume starts to diminish up there, like look at does this show you strength on the buyer's part on the daily of NASDAQ? When they closed it above there, I don't see big body green candles. I see an indecision candle. I see a pin bar candle. That doesn't give me too much confidence that buyers are there. They're there, but they're not really there. Okay, I see it come down and then they reject it back up. That kind of shows me that they're interested, but there's no follow through. Okay. When you play sports, basketball, for example, when you're on the 3-point, when you're doing a 3-point shot or a foul shot, you follow through. It's all wrist action. That's what I'm trying to teach my son playing basketball. It's the follow through. You got to have that. Like watch Michael Jordan when he's shooting a free throw. It's the follow through. Shaq never had that, shooting free throws. No one taught him how to have follow through. So buyers, no follow through. Who will step in? The opposing team. The sellers came in with an ignited bearish daily candle, dropped it. Where? 50% of this is, I'm not even going to measure it. You guys tell me. I can just visually look at it. See this big body green candle that started this run? Did you figure out where possibly 50% of that candle was? Okay, that's me placing the line there, but grab your Fibonacci tool if you can't do it that quick. Open, closing price. Where's 50% of it? Draw your daily point of interest right at the 0.5 right there, and that's it. If you need a zone there, one line above, one line below. There's your golden zone. Okay, you've identified it. Stretch it into the future. Not only yesterday, but I can see today that it's when it's traded in there, you can see how it's rejecting out of here. So it came red yesterday. Look it right in there. Tap that exactly 0.5 and came right there roaring back up with the buyers, but closed right there. Okay, so that's my closing price. That and where we opened, that is a significant point of interest on the daily, 22,077. We opened with green volume. It was green, 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 green. They were showing interest, but then the sellers at premium stepped in and pushed it down. I got a lower high from the all-time high supply. What is that telling me? They're lowering their offers down. They're trying to push it down, okay, which they are doing, okay? So they pushed it down, back down to where we opened, and it's continuing with red, red, red volume where we filled yesterday's entire wick, and we created a new lower low on the daily where we broke right there, but we created it in the big green box. That's why I say one notch above, one notch below, and utilize a zone here. So they're there still. I respect the buyers. They're losing a little bit, but they're still there, and they're bringing it right back up. Now look at what's forming. This is the second leg down. So we might kind of consolidate down here today if the buyers don't bring it up, or if the sellers make authority candle and statement candle, close it below here. That could be telling us something how we're going to trade next week, okay? But look at what we have. If this was a 5-minute setup, we've got this bullish move that created that. There's the resistance, all-time high in this situation. And now we got our 3-leg coming down. So we're coming down to 50% of this candle, which is basically the neckline. And are we going to come back up? When they're coming back up, look at what they're trading into. Supply, and then right there about 50% of that supply. Is that going to be the pullback right there and it's a lower high, and then they continue dropping it down, and then maybe we close below here, we make that ongoing box red, and then who knows next week if it continues to sell off. However, if the buyers step in this afternoon, maybe there's a Friday rally, I don't know, can they continue to push up against this red volume and maybe push it a little bit, close it strong, so that maybe Sunday, Monday opens green and we come back up, okay? So again, I'm a scalper, but I still follow daily candles when I do my overview and my homework on the weekends and during my evenings, okay? So you see how we're trading at the neckline now. So what I can do now is get rid of this red box inside and kind of just fix it with what is going on right now, okay? So go back to the all-time high, and what I do is I look at the right there, okay? So I leveled, like this is me manipulating it, bringing it right back down to the opening, the closing of yesterday and the opening price. So then I know if they're trading green in here, they're trading again into all of this supply. I can figure out where it's going to go within these candles here, because I can see where there's resistance right there. I can see where there's bodies right there at 165. So then I know if it's trading inside here, we are in the consolidated zone right here. This is the neutral area that we could get some sideways action while both sides are accumulating, while buyers are accumulating and sellers are accumulating, okay? So we could be trading right there in that consolidated zone while it's building. However, this is still coming down, red, red, red. It might come down, and then if it breaks here, could we drop down further? Yes. First line where there could be support is right here. 21,785. I would have a yellow line there if it breaks, and then I verify it. I look there, body, body, wick, wick. There was a breakout wick, no volume above, a touch, a kiss, perfect. A breakout, no volume close above, sharp rejection. And then this, look at where the candle closed, right at that yellow line. Then they gapped it down over a weekend. Again, we just had short volume close above there and they faked it out. So that could be where the buyers could be waiting. If there is a break of this block, they're looking to buy right there. If I'm scalping or hourly trading or 15-minute trading, just that break of that green block, the bottom to that yellow line, I look at it, I measure it's 85 pips. I go to my particular time frame and I look to maybe trade that volume down in there, okay? So let's continue going from daily to hourly, see what's going on, okay? So all I can see very visual now. I know after the fact it's very visual, but I don't do after the fact. I have my charts prepared the night before, the day before. The analysis is done prior to the volume getting here. We were talking about this area on the hourly this entire week. If you had a white line here, why do you not continue to have a white line here? Why did you remove it? Remember, these lines are static. The only thing that's variable is the volume, above or below. When we came down here, we retested it. You can see support showing, came back up. Here we closed right below it. Now the white line is acting as resistance, showing it. Here the green candle closed above it. Next time we came and retested it, it was acting as support. This body candle closed below it, it was acting as resistance. We closed above it here, acting as support. Closed below it here, acting as resistance here. So the same candle. Now I can see when we broke 7 a.m., 8 a.m. looks like a fake out on, remember we had some flash manufacturing news in the market, so it came up right there, and we do have resistance behind us. Okay, what I like to do is I also have other lines because I look at how the hourly candles are trading at these levels. Okay, so normally I look for the cleanest area I can find, where I get multiple touches. I like here because then I see that big red candle, about 50% of it. I can see where it held support there, closed below it, pushed down, retested it, back down. Here we kind of see where the volume kind of closed and opened right under it. There was that big fake out, okay, and then bring it right back down. Did we touch it today? We came fairly close to it, but that's me again just placing a single line. What I didn't do was a little bit above, a little bit below. Had I have done that, then like what I mean, a little bit above, a little bit below, I would have caught maybe the tip of that wick there, and also the other one. How do you do that? Okay, without guessing. Okay, remember this. Let me show you. Okay. That's why the Fibonacci tool is nice to use for this. You see this, where I placed that original white line, where I had it all week, and then there's a yellow line there for a reason. If I just want to map out this zone or find 50% from this white line to there and find my zone, grab your Fibonacci tool from the white line to the yellow line. Okay, there you go. Now you got all the ratios within your zone. Again, we're looking for that 50%. 0.5, there it is. If I'm looking for my zone now within this supply area, there's one notch above, one notch below, and stretch it across. You can continue to stretch this across because it's a static zone. So do you see now how I figured it out with the Fibonacci, not just guessing now, okay? So that's what I do. I trade line to line, tape to tape. And then when I'm doing my Fibonacci within tapes, bring it in there and you can find the exact ratio. And now what I'm starting to see is like a two tops. Here you had a top, okay, where it came up, the big drop, we came back up, and then they dropped it back down, okay? So now we've got a lot of red volume starting out of Wall Street, continuing at 10 a.m., continuing at 11. Now we're trading in that green block. So are we going to get possibly an hour reversal? We are less than 4 hours to go trading today. So what I'm doing is now I'm mapping out, getting ready for if it can trade from below here to the top of this green box. What do I see right away? I see a big red candle, 10 a.m. What am I doing? Now we're doing the freestyle stuff that I just talked about. Now, this is where, if you got questions, how is Ron doing this? This is how I'm doing this. I'm placing a white line right at 50% of that NASDAQ hourly candle, okay? And I'm just guessing that that's where it is, okay? If I don't want to guess and I want to get this entire zone without guessing, okay, then what you can do is, again, Fibonacci tool. From this line, yellow line, to the top of the green box, that to see if it breaks out of here. See the 0.5, okay? I was not 100% accurate. I was looking at the candle, not the entire zone. But now if I'm looking at the entire zone, I bring it up to there. Again, can I find one notch above, one notch below? Yes, I can. Place it red and drive it into the future, okay? And then if you don't want to keep your fib on there, remove it. So but now what I'm seeing is maybe the supply is being lowered right down to here, into this candle. So if we are starting to come up with buyers and we start to build out of this green box, if it's coming up green, 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 you have to acknowledge where you're trading. You could be trading in a lower high supply area where sellers are waiting to sell at this premium and then to drive it back down. And if they drive it back down, we're looking for a double bottom. We're looking for the next powerful leg to come into the market to break through this red block. And if it can break through, we're potentially going to come up to there. And then pull back, then you bring this zone across. With the closing volume above, you make it green, and you continue to stretch this. And maybe now we're building with higher low support, and more buyers now are accumulating in here to take it back and trade up to these zones. And then there's your wave. There's your wave 1. There's your wave 2 correction. There's your wave 3. There's your wave 4 correction. And then there's your redistribution of wave 5. Okay? But something could happen at these zones. Okay? So I just want to prepare myself for when the volume comes there. I'm not guessing. I'm prepared. Okay. Now this could continue to push down. We got a lower high, lower high. They could continue to break this. Now look, I have that daily point of interest right there, 21,787. What about from the green to the yellow? I'm going to show you without looking at anything to the left of my chart. Normally I look at the left and I do my own analysis. But if I don't know what I'm doing right here, and I'm just grab your Fibonacci tool from the bottom of the green to that yellow line real quick, and then it's going to already identify exactly where 50% of that zone is right there. I can draw a white line. If I want to draw another green box, I can do the same shit. But I just want you to focus on 50% right there. And now I look back, I'm back testing to see how volume, if it ever did come down there, how did it trade down there? Look, okay? Now we're starting to see how it reacted when it was trading here Wednesday. Okay, closed kind of a little bit above it, choppy, but look at the time it's trading. This is midnight, not the greatest time to be trading NASDAQ. And then it started 1 a.m., drop, close below, and then look at London, start to bring it down. We start to come back up. When? Look at the time, 8 a.m. 9 a.m. Wall Street, close with volume above. Look at the retest, 10 a.m. Pull back, a little bit lower, but still respecting above that white line, drive. Look at this next pullback. If you were waiting to buy at 50% of that zone, you nailed it. You nailed that wick, and you killed that trade there. Okay, so I can see it came red, red, red right to that white line and pushed right back up. Here it's coming down again, coming down hard. Okay, if you're looking at your RSI, look at RSI on the hourly. It's right at 30 and below. So there's hourly buyers who are just buying off of RSI, but look at what they're buying against, that heavy selling pressure. This candle is going to close in 43 minutes. We're going to now watch on the lower time frames if it's going to start to pick up some buyers and come back in, or it's going to continue to drop through here. Okay, so it is bearish on the daily, it's bearish on the hourly right now. We have to have some type of bearish sentiment. If we are buying, we know we're counter trading. We know we're buying against this trend. Otherwise, if you don't want to feel like buying against a trend, then you got to look to sell pullbacks. Okay, so 5 minutes on NASDAQ. This is what it looks like. Coming all the way down, close below that zone. We got our first bottom right there at 1045. It came up, but it's not breaking right here. Again, they're dropping it. So this now, let's watch how this 5 minute candle is going to close now in the next 2 minutes. Okay, so let's pay attention to this. Let's just put this side by side with gold. Gold is moving its way up. Okay, back up to this area, the daily point of interest. We'll continue to watch that. We'll see if we get gold volume closing above here. Is it going to be a fake breakout? Is it going to be a confirmed close? Will we get a retest? So gold is moving bullish. NASDAQ is moving bearish right now. These two securities are not correlated. These are completely different asset classes. Guys, are you guys getting better at identifying the zones and the lines? It shouldn't be that complicated. If you're using just kind of like 50% levels, it should be coming very natural to identify these. And then just do 1 day of just watching the volume, how it comes to those levels and how it reacts there. And you will be surprised that sometimes when it comes there, it comes to the exact line you placed, and then you're like, wow. That was like the aha moment for me when I started to learn this. It just gives you a little bit more confidence taking the trade. You know, at least you've done a little bit of analysis. Some analysis is better than no analysis. I know traders that don't analyze nothing. Believe it or not, there is traders that don't analyze nothing. Then you are at welcome to the financial casino. and you're just gambling your money away. Okay, so we got 30 seconds to go on NASDAQ. Now I like to watch the close of 30 seconds. So see those two like kind of tweezer bottom lows? Normally we talk about tweezer bottom lows with wicks. These are tweezer bottom lows with bodies of candles, okay? So they're dropping it, okay? 12 seconds to go. If it pulls back, there's about, 50% of this red candle, and it's lined up with those tweezer bottom lows right there. So here's the official close. And the big green box, I'm going to flip it red. Okay, because I know now if they're buying still into supply. This candle opened, ignited red and pushing down. Broke the low, continued to drive. I did not sell this candle. I should have. Shit. Okay. And I could have just dipped right out of that candle alone if I wanted to. But I'm going to wait for a possible retest to sell again, to try and sell at a premium. I'm waiting for the market to come back, maybe to test this red line or to test inside here. Okay, this could come all the way, bleed out to our white line. Remember we placed that white line? This is what we call divergence in the market. You see how it made a low and a new lower low? Look at your RSI indicator where, wow, when it came down here, it was down to 7. Holy shit. On this big run down, RSI was down to 7. And that's all that momentum brought it up to. You can tell how strong the selling pressure is. And now they're dropping it all the way right back down. It might kiss our white line. And if I was to draw a trend line, you can see it's right back to 2830. So it's showing us that the strength is increasing while they continue to come down and hit pending orders. Okay, so that's what bullish divergence is showing us. That's still not 100% to take a trade because we have no green candle in sight closing above anything. If you take a buy here, you got to understand that they could continue to drop it down on you. Okay, so there was a good response by buyers. This is the thing. I didn't place my box a little bit above, a little bit below the white line. See? So that's the mistake if you're just relying on it to hit your line exactly. That's why I always do a little bit above, a little bit below. I didn't do it in this situation, but that's the mistake. If you fail to do that, then you might have a pending order waiting at that white line and then it just missed you by a couple pips. It's happened to me a million times when I'm doing that too. That's why if you can get in the habit when you find a area, a point of interest, do a little above and below. Okay. So it came down there. Buyers are there on the 5 minutes and pushing it right back up. Gold is trading right at our point of interest right here, and they're pushing it down. So let's see if it can build and come out or if they're going to drop it down. This looks like the second top building on gold as well. There's the first top, second top. Bruce, this is not easy without me. You'll get the hang of it. You'll get the hang of it. As long as you know what you're looking for. Russ, the more and more I explain it on a daily basis, the more it becomes clear. Perfect. That's how we learn, with repetition. That's how I learn. If someone is telling me something, the more times they tell me it on the daily, then I learn. And then I put it to practice. Then I come in and then I try it myself without risking money. Open up a demo account and test something. Okay, so we got a nice big bullish hammer candle coming right back up. Okay, so let's see how this candle basically closes. We're closing in a minute and 15 seconds. Okay, so it's a bullish pin bar, but we're still trading against a lot of red volume. Okay, it just tapped the first red line. There's that like kind of 50% of that red candle, and then this white line is the daily point of interest. Can the buyers get it above here? Okay, so this could be where it's the first leg down of this zone where it came down. Now we're looking for it to maybe come back up. Okay, it might come back down. Then what we're looking for is a second bottom here, or a liquidity grab, and then they do something like this, that leg will be more powerful. And then if we got the confirmation that they got the pending orders, then we have a high probability we could break that point of interest on the daily and continue to drive and maybe just reverse this little leg down here. However, this could just be small pullbacks and they continue dropping it down. So we might have now encountered a consolidation zone within here, and we got to see who's going to accumulate more while we're waiting to take a trade. Okay, same with here in gold. You can speculate, you can take a buy up here or you can take a sell, but you're still within this consolidating zone. It could still trade sideways. Okay, so first thing I see is a bar close, a bar close here, and a bar open here. When I'm studying candles, like candle by candle, that's where I start to draw my first support area, you know, at the body, body, body. And I want to see now, will this red line continue to hold here at 860? This is when you're like scalping candles is not just scalping candles. You got to start to make your own analysis to get ready to take a scalp. Do I trade every day? Yes. I'm an everyday trader. Everyone's a trader. You're trading your time to learn something right now. That's your trading, guys. Everyone that's here on this call with me, you are trading your valuable time to be here with me. You're making a trade. I hope that that trade is beneficial to you and it's positive to you. Because sometimes we trade our time for other things, and like sometimes I trade my time to watch Netflix, and then, you know, where I could be trading my time to be doing chart analysis. What could benefit me more? I know Netflix is funny and it's nice, but Netflix is not making me money or making me learn, unless I'm watching a financial Wolf of Wall Street on there. I could learn about pump and dumps. Okay, so while we're talking, are we still holding support at this red line? We are technically, if we speak technically in technical language, we're still holding here. Okay, so today we're on 5-minute candles. Do you guys want me to go to 3-minute candles? Do you guys want me to go to 1-minute candles? Do you guys want to see something different this afternoon? Or do you want to stick with the 5s how we're at? Because remember, the lower we go, the faster it is. Okay, are you guys okay with 5 minutes? Do you want to continue with the 3s we've been doing all week? Or do I scalp 1 or 3? I scalp, Khadija, anything. But when I'm scalping alone, I'm on the 1 minutes. Myself sitting here where I'm focused and I go to the 1 minutes. But I know how to trade the 1 minutes. I know exactly what I'm looking. If I get 10-15 pips, I pip and dip out of the market. That's why it's difficult for me when I'm trying to scalp 1 minute candles with an audience, because sometimes I get in a scalp, you guys get in a scalp with me, I'm dipping out 15 pips and you guys are looking for a 50 pip move, and I'm not I don't have that mindset. So you got to have the right mindset, guys. I'm just telling you straight up. In order to scalp the markets, you got to be a very disciplined trader with your executions and understand exactly what you're looking to get out of that scalp. Not out of that intraday trade, not out of that swing. It's what you're looking to get out of that scalp. That scalp could last for 1 minute, 2 minutes, in and out. That's it. Even if it's like 2 green bars and you're out, that's considered a scalp. 5 minutes? I'll stick with the 5s. Val? 5s? Okay. Daniela, all good with 5s? Let's stay with the 5s. But if we do a 1 minute session, the title will say 1 minute scalping. And then if you're coming in there, trading your time, you're learning about 1 minute scalping. But I'll make it 100% visually clear with the title of the session. And that's what it is. Come in, enjoy some time with us, and learn about 1 minute scalping. Okay, so gold, it's still consolidating in here. Okay, so, but sometimes trading is you're waiting for something to develop. I know a lot of traders, like there's traders in here that are buying and selling, even scalpers. And they're probably getting annoyed. The buyers are getting annoyed that it's not breaking out of here, and then they're going into a little bit of drawdown. The sellers are selling here, and they're getting annoyed that it keeps making a higher low and a higher low and a higher low. Okay, so I don't want to be part of that right now. Let them fight it out. I'm going to wait for more confirmations. Cash, you made 3 pips today and you're satisfied with going in the weekend green? My man, three pips? Hey, my first 3 pips too, when I made in the markets, I was jumping up and down for joy. Then I learned how to make 10 pips a day. Oh man, I had the best weekend. Then I learned how to I set my goal, I set my standards high when I was learning 30 pips a day, consistently. 30 pips a day. Can I close the week with 150 pips? I've never done that in my entire life when I started, because I would make 30 pips, then give 50 pips back. Then it was all over the place, but I never could understand consistency. It took me years to learn. But went to 30. Then once you're starting to learn that and doing it consistently, set your goal to 50 pips a day. Eventually, the target for everybody, I would hope, is 100 pips a day. Some traders can do it with ease. Some traders, it's very difficult until they understand what they're looking for. But you will get there, guys. Okay? So we came right back up to our 50% of that red candle, that red line. Sellers are present, pushed it down. Coming back down. Coming back up. We have like tweezer top highs at that wick right there. But it's still trading above here. So you can see now how really consolidated the 5-minute volume is on NASDAQ right here. Right in that little zone that I started placing a line. Why? Because I saw how the body of the candle closed, how this one came all the way down, it closed up there, and where this one opened. Okay, so looks like maybe a bear flag might continue to push back down. But if it does, it could just come down halfway and pick up higher low buyers at 845 and come right back up. Okay, so I don't see a red candle closing below here yet. This one could possibly impulse break with 3.5 minutes to go. Gold looks like it wants to come back up and try and break out of here. Oh, after I recorded that webinar, I forgot to hit the record on this, but I'll hit it right now.
Recording in progress.
Crypto Man, 100 pips a day is a good target? I think so. I think 100 pips a day is a good target. It's achievable. Like, I don't want to say, can you guys hit 1,000 pips a day, and make the bar so high. I think 100 pips a day is achievable, especially if you're trading the securities that move. Like Dow is like 600, 700 pips in a day. I'm sure you could maybe try and get 50 pips out of it, maybe 75, maybe 100. But start small and work your way up. Start off, can you make 10 pips a day consistently? Can you make 30 pips a day? 50. Don't set the bar at 100 or 200 and then you get deflated when you can't hit it. And then you want to start small and move your way up. Okay, so I'm going to ask you guys, for NASDAQ, I know a lot of you guys are trading NASDAQ. What is your bias on NASDAQ? Do you guys want to continue to sell on the 5 minutes and push it down? Or are we going to start to maybe speculate some buys? Or should we wait for are we going to get a double bottom, maybe some liquidity? Because you got to understand, now there's pending orders, liquidity coming in the market. There might be some waiting down below here. Okay, there is liquidity in here, but more of it's probably piling in there. I'd like to see if they can come and grab this liquidity and then reverse it back up. Then we might be building some structure to look for buys. Same with gold. We know that there's liquidity above this yellow daily interest line right above here. So there is liquidity up there. Are they going to come? They'll possibly come up there, but are they going to come up there, spike it, and then reverse it back down? Then we might sell back down to here. Will gold close above there? If it closes above here and we're building, then we could continue to drive up here. You guys are more bearish. Okay, so then stick with that bias until we start to see something significant building from the buyers. Okay, that was a significant rejection. And then that was the follow-up move right up to 50%. So didn't really show me, it just showed me a retracement back up to this 50%. And then the sellers are there pushing it right back down. Okay, so I want to see now, will they come back down into this green box? Will they break it and grab this liquidity? Then will we see a big rejection? Or is it building a rejection now as it's coming down and continuing to build right back up? So again, trading is a waiting game. Trading is a waiting game. Even for scalpers, trading is a waiting game. It doesn't, just because I'm a scalper, it doesn't give me the right to trade every single candle. I can be disciplined or patient for the candles I choose to trade. Okay, so we closed with gold above. Okay, so if it pulls back, again, where's about 50% of that green candle? Right around here. So if it comes back down red, red, red and retest this and go wick out of here, we could possibly continue to move. We're nowhere near being overbought on the 5 minutes. RSI indicator is indicating 63, 64. So still, we're in an area of strength, and it could continue to build and fill this zone. Okay, so now it's red. Tweezer top high wicks. Okay, see those equal high little tiny wicks? You can see them, and dropping all the way back down. So it couldn't hold originally the first yellow point of interest. Now 50% of the green candle. Is it going to come up here, or is this going to be a red engulfing candle close below here? Then we have a fake out up here. So then we know that they grabbed some liquidity and then they're reversing it and faking it out. So let's pay attention to that. Rob, personal question. How was your trading week? How much percent did I personally make? It is kind of a personal question, yeah, but it depends, again, what I'm trading. I did really well in the stock market this week on the individual securities. I tell you guys I'm scalping micro strategy. I was going to call it micro strategy, but it's called strategy now. He changed his name. So I got 12% out of micro strategy this week, and I could more than what I look for 5% in the markets. I actually had some options with Alibaba. Those ones turned in 15%. And then trading US 30 and gold and Forex, I hit my 5% goal. So altogether was a pretty good week. But I love volatility, Rob. I love volatility in the markets because it allows for options to move. It allows share prices of securities to move, and also what we're watching over here. So yeah, it was a pretty good week, above standards, what I normally do. But my goal is about minimum 5% per week. That is my goal. 1% per day, modest 1%, and do 5%. But I told you guys, sometimes when you got rhythm and the market is trading in your favor, then continue to trade. That's what I did, but I was locking in profits along the way, and my options kept yielding good results because Alibaba kept driving. I had calls. MicroStrategy, I scalp it in and out. And guys, look at NASDAQ. Wow. Okay. So sorry to, but we got to go right back over here. So it closed, traded right in there, and continued. So this is that. Now I look for clues in the market. Are they going to come and grab this liquidity, or is this thing going to continue to push down? Gold came all the way down, did not break, didn't close below here, coming right back up. Will gold close and maybe continue going up? Let's see. So both of these candles are going to close in 90 seconds. So let's pay attention. Pop, you got your 70 pips now on NASDAQ. Oh man, 70. Wow. Okay, so another 30 and you're at 100 pip daily goal, and that's it. Then Pops, have a great weekend. You know, that's, if you find it, you got it, you know. Okay, so 60 seconds now. Now it's clue time. Okay, let's watch for clues. We have a very nice candle building, bullish candle building on gold. Okay, it's closing. Will it close near the high? Will we get another pullback? Will we be able to buy off this candle and continue to take it out? I'm already thinking if I'm going to buy gold, my stop loss minimum should be below this structure, maybe below that wick. Okay, so I'm already thinking that 15, 20 pip stop loss, and I'm already calculating in my head, if I do take that trade, if I'm putting a 15, 20 pip stop loss, what lot size am I going to go in with? Like all of these things. I'm calculating all of these things in my head before I take the trade. This is kind of the first trade. Do I want to go all in with this trade? Do I want to wait for maybe a pullback? Do I want to make a speculating trade up here? All of these things. Do I want to trade gold as opposed to looking at NASDAQ? There's a lot going on over here. But let's see the final close. Okay, so here's the close. Is it closing with a red body? Okay, we know that it made a high. Okay, ignited green candle could continue to drive, but if it cannot break above this wick, it could get rejected and come back down. So what I'm looking at is I acknowledge that the candle opened very strong, and it's coming up, but will it break for a new high? No. See how it got rejected and now it's coming down red. So could I get a buying opportunity back at this yellow line? Will the market fall down to allow me to buy the retest right here, or it might not even come down? So it didn't come down in that situation. Came back up. Is it going to take out that wick, or is it going to come back down? NASDAQ. Okay, do we see, is there some tweezer bottom lows right now in the market? Yes. So far we have equal lows. Can we build off of these equal lows? Remember, did they just take out a little bit of liquidity there? Do they want to come deeper into here? So gold, again, I'm looking at it. I'm paying attention to both securities, guys. It came up. Again, it didn't break that high. It came back down. Okay, so again, it's coming, still hasn't broken that high yet. So I look to see. Now, there's tested. There would be an equal high if it gets rejected right there. Oh, okay, no. You got the bullish breakout now. Okay. Just stick with the volume. Let's continue to watch. I'm trying to get a conservative buy back in here. Trying to get a pullback buy in here. Okay, I'm trying to get a pullback buy in here. Maybe I'm looking to buy above the green box NASDAQ, but I want to see where are the buyers? Like step in and start pushing some green volume above here. We still don't have like a bounce yet. Remember I was saying, are we going to kind of develop a second bottom right over here? Sorry. Where it came down, where it came back up, it came down like that, the double bottom. But remember where I had this coming down to grab that liquidity and then maybe come back here and then retest this. That might be an opportunity to buy off of this. But I gotta watch. It's still a spin top candle. Like NASDAQ has lots of indecision with sellers and buyers right around here. Gold is near Tokyo high, Rob. Yeah, so sometimes in order to be patient and wait for a pullback, you're going to watch volume move away from you. That's the hardest part. If you ask me, that's the hardest part of waiting for a trade to come to you, is the trade is running away from you for right now. You're going to see that. But if you keep waiting and waiting and waiting, it may eventually come down to you here. So that's just the nature of waiting for it. And you got to learn yourself. Sometimes it will come back, sometimes it doesn't. Okay, so we got equal bottom lows where it broke that block. That white line is a significant line we got from our looking at the past. Okay, so we got now green volume, but we still have 50% of that red candle. Okay, so I continue to see. I wait for the trade to develop.
Okay, so we got a good
Answer so far by buyers below here. Equal bottom lows, coming up green strong. Again, will we close above 50% of that red candle? Will we engulf that entire red candle? Are the sellers going to bring it right back down in the last 30, 40 seconds? Gold, we'll see how gold closes. What about DAX, GE30? We're not doing DAX currently. DAX is a great security for London. Not this time of the day. This is where I would be focusing on US indices. Okay, so here's the close for both gold and NASDAQ. So they closed it right at 50% there. Okay, so is it going to come back down into here? Hold. Are we going to come back, build in here? Is it going to be an engulfing red candle, come all the way down again, take out these lows? Gold is kind of retesting 50% of that green candle now. But again, I'm waiting for a pullback buy. Otherwise, if I'm buying up here, I got to know that it could be just a short drive and then they could drop it down again. Okay, so again, I'm just patiently waiting. I see a red ignited candle coming down. Will it engulf this green bar and come all the way there where I want to enter? And then look at this, okay? So you see how I marked 50% of that red candle? Look at where the volume closed. Right where I put that red line at 50%. I didn't use my Fibonacci. I was just kind of guessing where's 50%. And now I got a red ignited candle open and continuing to engulf this green bar. So I'm going to see, will it pick up a higher low? Will it respect these tweezer bottom lows? Or is it going to break? And what do we have down there? There's our liquidity. Okay, so look at that. If you bought that green candle, you know, you're buying against the trend and the red volume is still pushing down. Okay, look now, that's a clue. It came down there, didn't break, so we got kind of those 3 wicks there. So buyers are interested at this area, bringing it up, but they have to bring it up against all of this red volume. So the red volume is still coming down. Gold came red, 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 nice push off of it, could break and continue driving. I'm telling you guys, I'm waiting for a pullback of gold in here. So I'm going to potentially miss this run. And I'm also watching NASDAQ, how it's being created with those pretty much 3 equal low wicks there. Where do I think gold will go if you're in a buy, in the buy trade? I have it targeted right here for you. This thing, if it comes all the way up to that bigger red area, 29.43, that's about a 40 pip move. If you just want to measure half of that, you can measure half and figure it out. But the entire range, if it can continue drive, there's that big trend line, and then our next resistance up there. If it can fill this entire move, you're looking about 40 pips, 30, 40 pips. Still strong. Came up, retested, higher low, continued drive. You got candle. Now can you get your green buyers push this up? Again, I'm not in a buy. I'm waiting for that pullback. So waiting for pullbacks, you're going to miss trades. And then you don't want to go against your principle. If I'm waiting for a pullback, why would I want to buy now at FOMO, what we just talked about, and fear of missing out? Then why are you even patiently waiting to buy a pullback? Like, it defeats the purpose of this strategy, okay? So you got to understand that if you're waiting for the pullback and you miss this, it doesn't give you the right now to go and buy up here. Then you're just feeding into the FOMO game. And you're going against your principles that you stand for. So I'm still waiting for a pullback. If I don't get it now, maybe I'll get it in 30 minutes. Maybe I'll get it in an hour. But what I do is, at that yellow line, I'll place an alert. And when the volume eventually comes down there, I will be looking either to buy the pullback or sell below here. But right now, as a scalper, it's moved away from me. Gold. NASDAQ is still building. I'm still trying to analyze what's going on with NASDAQ. It's coming down, equal low there, back up. Came down, equal low, back up. Came down just a little higher, but back up. Can they flip this red volume, or are the sellers going to continue to drive down this? Okay, so now we got a sharp rejection right there. I'm assuming that's 20% from this yellow line to that red line. Okay, this is just me. Remember what I said, halfway? If you guys know how I trade, when you don't know where it could go, or half that zone right there. From the yellow line to the green line, there's 0.5. If we're just looking at half of that zone right there, 2,941 and 12 cents, that red line we just tagged into a little higher than half of it. Remember what I do? A little bit above, a little bit below the line. That's a little bit above, a little bit below, and then there's your zone. Okay, and if you want to trade for 20 pips, you know, that's unfortunately that's maybe how much that leg gave you. Okay, so came up there. How big of a move was it from when it broke out of here? 25 pips. Okay, 25. And then look, they rejected it sharp, came down, bearish pin bar. Are they going to continue to push it down now? Will this be ongoing supply? Could I get my pullback buy in there? Wow, NASDAQ. Okay, look at those sellers closed it right near the low. It opened, came up, flipping the box green to red, just continuing with the theme. It came in there green. Look at these buyers are getting smashed today on NASDAQ. I'm sorry. But right now, like, that's why I don't use this RSI indicator. I don't like this indicator because it gives so many false signals and the perception that we should be buying when in fact we shouldn't be buying, because the buyers are there but they're not following through. They're not confirming anything to justify being confident with a buy right now. So this thing is continuing to bleed out. Now, they're coming down? Did they spike the liquidity and then they're getting ready to reverse it back up? So the market is, you guys are 100% correct. We're saying NASDAQ is still bearish. I agree with you guys completely. It is still bearish. But do you see how these these green candles can be deceiving? You know, that's why I always look. Prove to me that it can close above 50% of that red candle. Then that will give me at least a little bit more confidence that the buyers are strong. And sellers are just now dumping it down, guys. Wow. Okay, so if it comes down to that, this is where I might start a feeler trade. Down at this yellow line. Because I know it's really bleeding now. But now we're coming down to a daily point of interest down here. So I know it might not trade exactly right at that yellow line. So I go a little bit above, a little bit below. If I can get an order filled in there, I would, as a first starting position, I would like to start a buy position in here, because I look relative. If some buyers bought there, they were in drawdown. These buyers bought there, they hit drawdown. The buyers bought this, they were in drawdown. So maybe if I buy in there, maybe that might be the start of a move coming up. But again, I don't just buy, I watch and wait for how the volume reacts when it comes in there. And we're approaching 1 p.m. very soon, in 7-8 more minutes, where we'll get a new hourly candle in the market. So what we can do with NASDAQ too is check the hourly. Let's go full screen, check hourly. Okay, like look at, if we're buying, look what we're buying against. We're buying against 1, 2, 3, 4 hours of heavy red volume, making lower lows, lower highs, lower low, lower highs, and a lower low. Look at the wow, it's still like, look at the 25 on RSI on hourly. So there's hourly buyers that are getting slammed on this. If I'm looking for an hourly demand zone, if it continues to drop, now this is where I'm looking to really start a position. Okay, you see here in the past, see where it formed. One bottom, it came back down. Nice answer. Again, came back with 3 wicks here at this green block. So stretch this into the future. I know we're far away from it, but if it comes in here, I'm telling you guys verbally, I will be buying in here, okay, in the green box. I don't give a shit how it's trading. I will be starting a position in there, okay, because I can see how it traded there in the past. Will it ever get down here? I don't know. But that would be really, really good, deep buy in the depth of market. Okay, so right now we're coming down. It's a very, very bearish hourly candle. We can see it on the 5s. So you see, guys, there's that bigger green block down in here. If it ever comes down in here this afternoon, I'll place a buy in there. Okay, but it might not come down here. Maybe we're building above here. Maybe they got enough of this liquidity and it's time to start reversing this trend. And this is a steep trend line. Like just starting from here, it's a steep trend line. Like look at it. I can't even match it up. It's so steep. Okay, so we're still trading below here. Do you guys like when I zoom in a little bit, or do you guys like to see more like structure, like more context? Okay, so gold has tried multiple times in here, still consolidating. I'm still looking. Will I get my pullback buy in here? Will I get maybe selling pressure will come in the next hour? Maybe I sell back below here. Who knows? I gotta continue to wait it out. Guys, on Telegram, we got a free Telegram channel, SST Telegrams channel, pinned at the top of YouTube for you guys. Highly recommend you guys join it. We're giving a free lifetime membership away for the 80,000 subscriber. I know some of you guys are unsubscribing and trying to subscribe to get it. Guys, don't do that because then we're losing subscribers. Maybe we should announce when we're going to do it. Okay, so now I was saying I'm looking for my pullback buy in the green box. It's a heavy red candle. We've got 3 minutes to go to the next hour. So this is where I told you guys I was looking for a buy in here, but then I look at the time of sales. Do I want to take a buy right before this hourly candle closes, or do I just wait and see now? So yes, I'm looking for a buy here, but maybe I just wait for this candle bar to close, see how it goes into the next hour. That's why sometimes if I'm sitting at my trading station, I don't need to use pending orders because I'm right here. Had I had a pending order in here, maybe activated and then it's going right into the next hour and then could potentially do something opposite what I want. So I'm right here, so I don't need to use pending orders. Pending orders are used for if you place it at specific areas, like down here, this big block. If I place a pending buy in there and then I know I'm going away from my computer, maybe I could have it in there pending. Okay, so, but let's just acknowledge, first retest, the buyers are present, bringing it back up. NASDAQ is continuing to just drop. Okay, so don't get caught buying just because you think it needs to come back up because it's been dropping all day. It is bearish on the daily, bearish on the hourly, and even bearish on the lower time frames. Even whatever this RSI is suggesting to you, then look at your price action. What is it suggesting? I don't see any strength in buyers. I see that they're there, but they're getting just overtaken by all the supply. Okay, but now it came and triggered that daily position. Notice the time when it triggered it. Okay, we're going into a new hourly candle. Will we get maybe 1 p.m. start a mini reversal? Could it drive one leg up? You know, and then that's what the leg we're scalping back up. Well, again, we got to see that. Maybe they'll continue just to bring it down here and the hourly start, grab more pending orders and then reverse it up. So this is nice that you guys can see this live while it's happening. The way how we're transitioning from an hourly candle close and going into an hourly candle open. For some securities, 1 p.m. is also a 4-hour candle as well. You hate getting slipped in your pending orders? Yeah, I hate getting slipped in market execution or pending orders. I know pending orders, you set a limit and hopefully you get filled at your price and you still get slipped up. That's just the volatility in the markets, guys. It happens. And also broker execution. Some brokers are better than others. Some brokers have better liquidity spreads and fills than others. That's just the nature of the game. I recommend Fusion brokers. If you're looking for a regulated broker, Fusion, I've never had any issues. Haven't heard much complaints from anybody using them. They have great spreads, great commissions. They're based out of Australia. Fusion Markets, pup. Fusion Markets. Check them out this weekend. Rob, you're using Fusion Markets on an EA for test purposes. They're fantastic, Rob. I got no issues with them. Okay, so we're starting the new hour, guys. Okay, so how did they open it? They opened it red. Okay, gold opened green. But gold, guys, we're kind of just, again, in a consolidated flag above here now. Okay, so maybe we let gold do what it needs to do, continue to consolidate. I'll clean up the charts for us. So NASDAQ, is it going to take out that low and continue? Are they going to build a higher low right here? IC Markets is way better from spreads perspective and the EAs. I don't know, Rob. I've never used IC Markets. Morty, where's the link to the Telegram? Pinned at the top of the YouTube channel. Pinned at the top of the YouTube channel. It's pinned right at the top. If you scroll up. Okay, so look, guys, if you're just buying, look at what they're doing to us on the hourly. Okay, they're continuing to drive it down on the 5 minutes. Okay, so let's see. Are they going to drive it down there, reverse this, pick up those orders down there, reverse this, or is this going to continue to bleed out? If you're in a sell, some of you guys, if you're in a sell, this is where I would utilize a trailing stop loss. Because I would put your trailing stop loss below each retested zone. So if you sold up here, where it came up here and retested this and dropped, I would place my trailing stop loss right below here. Here it dropped and retested this, I would place my trailing stop loss like below this block, so I can pocket all of this money coming down. Okay, same with here. If this kind of closes below here and retests this and gets rejected and keep dropping, I would take my trailing stop loss and start to secure some of this. Because eventually, at some time, this may reverse and start to come after your TP. So with a trailing stop loss, when the market is trending in your direction and you got either a runner or you have your position, trail it down, guys, so that with your confidence and you know that you're compounding your account, you're still securing all of this money coming down. So it's naturally continuing to break and drop. Okay, so they grabbed these pending orders. They got them, they're activated. What if they were the buyers? Now, again, buyers are caught in drawdown again. So it's still at me looking on a perspective of buying or selling. I'm still not convinced that buyers are in the market yet. Do I want to sell maybe the bottom of the market? Probably not. I would rather sell a pullback up here, sell pullback up here, sell at premium. I'm looking to buy at a discount area, but there's nothing suggesting a buy yet. Wow. Okay. So if it dips down in here, I got to go full screen to show you guys this. What do we have? This is a 5-minute candle below the yellow line. Okay, so what volume have we had trading below here? Below this yellow line, do we see any points of interest on this Let me look real quick and see. I like to place a line right over here. Right here was kind of this entire neckline where it broke, and then I can see where it just popped out of there, filled up, and came back down, and then retested this and dropped. Here was a fake breakout of that red line and dropped. Here it kind of faked it and closed above there. There kind of drove above it, Here where it came back red, 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 and stopped right there at that red line. So there's where it's trading right now. Holy, we're hitting that red line right now. Okay, so like on any other day, I would be looking to take buys, but this is heavy selling pressure. Okay, so this green to red, we've closed below there. We're pushing below there. Now, see how we got a wick there. Will it continue to come back up? Holy. There's a weekly POI there, Sergio. Okay. But you can see how when the market is falling, even on a higher time frame, on a weekly POI, it could continue to break down. This could be the way how they're closing out a weekly candle, Sergio, on a Friday. It looks like it's very bearish right now. Okay, and gold is now giving us another retest of this zone. Okay, so but see how it opened right away, ignited red. Are they dropping it, or will this kind of get a wick and flip? Then maybe we could buy gold to come up to finish off this leg coming into that supply, or gold is going to start to push down now. And then we might see if gold is starting to push down. Let's see what happens with NASDAQ. So, wow. Markets are, that's why Fridays are not the greatest days to trade. If you have the wrong bias, like for example, if these buyers are keep buying and then they get put down and they're buying again, that could ruin an entire afternoon. It could ruin your entire week of trading. And most traders struggle with Fridays because they get caught in this. They're trying to continue to buy and buy and buy, and the market keeps dropping and dropping and dropping. Or sometimes when it's going up, we continue to sell, and then it keeps going up on us, and then we're selling and it keeps going up on us. So Fridays you have to be very careful. They're kind of considered to be trap trading days to trap traders into going into the weekend and things like that. Just trade smart and trade responsibly. This trend line is still holding. We're still trending down. What will happen now inside this zone? Okay, so I'm also watching gold. I see it broke. Okay, will it flip now and come back up? Did they break this zone? Will it hold green and maybe we'll get that next leg coming through here? Potentially look for a buy there. Okay, so we got a change in direction of our 5-minute candle, change in momentum. Remember when it opened, it was red ignited to open, and it came all the way down here. Okay, broke, but it's a higher low, still above the structure. Buyers are present there, bringing it right back up. Okay, so we had a high, but it's still below 50% of that body of that candle, still lower high. So we got to watch how this candle will close. We got sellers still trying to push it down. We got buyers trying to buy above here. Will it close strong green? Will we get a continuation, maybe a buy off of it? Will we get another pullback down into here? And is NASDAQ going to consolidate in here? We're doing 5-minute candles today because if we were watching the threes, maybe we could have taken a trade already. Okay, so I can see this 3-minute candle, the one that broke, came close right there. This one opened. Are we going to get a 3-minute engulfing green candle now with 38 seconds to go? But when we're watching 5-minute candles, we still have to wait for that 5-minute candle body to close. Okay, so 3-minute could give us an indication if it kind of engulfs the previous bar. Then we got to wait for that 5-minute bar to close. That's why sometimes I select 3 minutes, 2 minutes, 1 minute. But you got to make up your mind what you're trading. Okay, so let's just see how this 3-minute candle will close. It's closing pretty engulfed. Okay, so it closed. We got a bullish engulfing candle on the 3-minute printout of here. On our 5, this is what we got, a bullish pin bar with 53 seconds left to go. So let's watch the final volume, how this closes on the 3-minute, or sorry, the 5-minute. And then I always pay attention to the last 30 seconds of each candle, whatever I'm trading. If I'm trading a 1-minute, 2-minute, 3-minute, 5-minute, 10-minute, 15-minute, I always watch the last 30 seconds of the close. So right now I can see the last 30 seconds of the close of NASDAQ. They are really shooting the market down. Gold is still holding above this daily point of interest, above this 5-minute box, still holding. Will it close relative to the high here? Will it engulf that 5-minute body? Okay, new candle open, ignited. Remember the short wick? So it could potentially just open and start to pop up here. But we got a red candle. Will we get maybe a retest again of 50% right here of it? Okay, it is now red. Okay, will it come down red right there? Maybe possibly we can buy off 50% of that green candle right in there. Will it come all the way down? Again, retest this. Okay, there's now the touch of 50%. There's the flick. Will it turn green? Okay, so I'm going to buy now, okay, because it flicked once. It flicked. I'm going to buy gold to see if it will come back and just fill this kind of imbalance to the left and drive maybe up to 50% of that red box. I know it doesn't look like a lot of pips, but that could be 11, 12, right up to there. And then I judge the trade when it gets up there. But my stop loss is going to be pretty conservative. Just going to put my stop right below that previous low and see if my green box will protect me while it's coming down. Will the buyers be there? And then if it breaks, I'll get stopped out right there, but I don't want to prevent the huge red drop. So that's my stop loss. When I'm opening it up just a little more, then I'm looking to take that out. To get a better risk to reward management, but maybe I entered too early on there. On that 50% wick that flicked, I bought there and then there was still more red volume. So maybe I took that scalp too early where I could have potentially bought in here and then saved this drawdown and then placed my stop loss a little lower. So this might be a lesson on going too fast. But that's my maximum risk right there. So I'm in the trade now. Now I got to monitor it. Got to see how it reacts in the box. Will the box still hold? That's why that zone is there. And then I just pay attention to the volume. The sellers are bringing it down, the buyers just brought it up, but if it comes back down with a tranche of red volume, it potentially can break its own low on this bar and then come after that next low. But that's why my stop loss is just right below it to protect it. So maybe this is a lesson, guys. We're going to see. If I waited a little bit more patiently, maybe I could have bought in the green box and then placed my stop loss a little lower, but maybe even buying there, it still will come down. Okay, so now it's attacking, coming back down. It was, yeah, that's it, stopped out. Okay, so I'm stopped out of that trade. So I tried to buy off of 50% of that green candle that came, but you can see that the market is still bleeding out. So that was a trade I took, hit the stop loss, single bar stop loss, and it happens. Now I got to regroup and see what will happen. Now I got to follow this volume. Will it close below here? If it does, green to red, then we might get further selling pressure coming down. Will it come just a little deeper and come back up? And then took out the stops, including mine, and come back up, and maybe I could look to potentially buy off of here. But that's it. When I get in and out of a trade, guys, I stop and I reflect on it. What did I do wrong? Can I learn from it? What's the lesson? And my next trade, is it going to be a revenge trade? Am I pissed off? What is going on? No, I'm continuing to watch the market and see what's happening. That's what I'm doing. I'm learning from what happened or how I could have done it better. Could I have placed my stop loss below that structure? Would I have been saved? Can I continuously learn from my mistake? That's what trading is. You got to learn from your mistakes. As a scalper, you got to learn fast, because you're going to be prone to making multiple mistakes because you're trading more often than any other trader. So you got to learn fast. And then when I look back at it, I waited for the pullback. I waited for it. This candle actually came through there, closed green. It engulfed that red bar. And then I bought the retest right at 50% when it flicked up, because I was trying to get that break right there and then just continue to fill there. Unfortunately, the offers were set lower and then brought the move down. Okay. There's nothing I can do about that. There's no excuses that I can make about that. To me, this is how I learn in the markets. And that was how much stop I was willing to give it. To test the green box, I was below there, and I was also below the previous low. Was more than enough room to let it develop and go. So I know that these buyers are not that strong right now in this green box. Okay, so we're getting a little bit of a move on NASDAQ. This is the first single move that came right into that green zone where I was saying if it drops in there, I'd look to take a buy. It didn't drop in there, just almost in there. So it came down. We're coming back up. Now, will it hit that trend line, that red box? Will it get rejected back down? Will it build a higher low, a double bottom? Now, this is what we have to watch for on NASDAQ. I know I see a green engulfing candle come back on gold, but do I want to just slam another buy? Because they could just continue to drop it down. So I wait for this body to close. See how tight my stop loss was? Guys, look, and to teach you guys, when you're scalping, if you use tight stops, you're going to get stopped out often, okay? So I had my stop just below that wick, and that candle took me out. Had I just placed my stop loss a couple pips below those bodies right there, or below those bodies, what I normally locate, I could, woulda, shoulda, coulda, could have been still in this trade. But that's not the case. Okay, so it's all about placement of stop losses too, guys. So I want this to be a lesson. If you place your stop right below a previous low, you could get taken out. So what was my mistake, guys? Please learn from my mistake. I failed to look at structure. Had I had looked at those bodies, body, 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 I would be I would be safe right now back in the trade. Okay, just from a couple, 1 or 2 pips. Okay, do you guys understand that? If you guys can learn from my mistakes live, perfect. What did Ron do wrong in that situation? That's what I did wrong. I failed. I'm telling you the honest truth, what I did. I just placed my stop below that previous low, thinking that was safe. And what I failed to look at was the structure of the bodies to the left of me. Okay, so had I placed it there where it was resistance turned to support, I still would be in this trade right now. Okay, learn from my mistakes, guys. And then this is the move that I wanted. I wanted to continue to come up and break out of here and see if it will fill up to this supply zone. Do I want to buy right now? No, because the candle still has 2 minutes to go and sellers could continue to push it down. I want to see now, will the buyers close it above here? Can I figure out where 50% of this volume is? Do I continue want to trade gold on the bullish sentiment, or do I just want to take a breather after I take a loss and just, you know, take it easy and before I get into the next trade? So do you guys understand? My stop loss placement was placed just technically, I should have been below structure. Okay, that's why also when you're trading, placing your stop loss is an artwork, as opposed to also looking where you're taking profit is also an art and skill. Okay, so if you forget to do something out of your routine, you can see how the market can come and take your money. Okay, so there they got my money. I don't know, guys, if you guys are learning because no one is responding to that when I ask that. Do you guys understand the mistake I made? It is a mistake on placing the stop loss. And then had I looked just at structure, what I normally do, that was a mistake, a costly mistake. So those are those mental mistakes that we make as traders. And then, but what some traders do is they fail to go back and do a journal or look at what they could have done better, what they could have done to improve that trade. They just forget what just happened and just go on to the next trade. I don't do that. I learn from each trade, whether it's a profitable trade, whether it's a stop loss, or whether it's a break even. I continue to learn from every single trade I do, and I trade a lot more than you guys. I can pretty much guarantee that. I probably scalp more than any of you guys probably put together on this entire call. Okay, so learn from my mistakes. I learn as I go from each candle, each trade. Look at there. Look at how they faked out those buyers. That was a really nice big bullish engulfing candle. Had we bought up there, look at what they do. They slammed it back down. Okay, so this could now start the downfall. This could start to break down all this structure, and this is where gold could potentially start to sell. If we see where now they're lowering the offers, now look at where the offers are being lowered, right down there. Okay, so it's a lower high. So now we're going to watch to see how the buyers react to that big push down. Are they going to respect this and come back up, or sellers are going to push them down? We could get a technical breakdown here, coming down to possibly sell gold. Daniela, perfect. Stop loss should be on bodies or below the bodies. Okay. Remember, bodies hold more weight than just a wick. I always state that, and that was my critical mistake. Okay. But had I still put it below the bodies and I didn't do anything when it came up there, now my stop loss, if I had it below the bodies, potentially would be stopped out now. Okay. But let's see if they can continue to hold this. Again, we're watching. Right there, they're just traded at that red line, and now they're breaking it. Okay, so this candle has 3.5 minutes to go. If it closes red below here, then what we're going to do is this zone that was green for a majority of time is we're going to continue to flip the color red and see if this will be resistance going forward, and maybe we can drive gold down. Maybe gold is going to have a short-term pullback. Let's see. NASDAQ is building. It came up very similar. Green, 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 right up to that trend line, right up to that red box. They dropped it back down. Will it continue to build in here? Come back in here? Again, just waiting. Sergio, good question. But it wouldn't be an ideal risk to reward if you lowered your stop loss. That's what I was saying. If I lowered my stop loss, my reward, I would open it up. Then I would allow it to break the resistance and break this and go higher. So if I'm opening up my stop loss, my reward is going up with it. Okay. If I have a tight stop loss, what I had on that trade, I have a tight take profit of 10 pips. Okay. Kind of $1 for $1. I'm betting $1 to make $1. If I'm betting $2 to make $1, that doesn't make sense. I would bet if I'm betting $2, I would look to make $2 in return or more. So because I'm giving it more room to breathe, then it would allow me more time to maybe continue to cut through more resistance and hold the trade, justify holding the trade. Normally when I scalp, I look for a 1-to-1, a 1-to-1 on my money. I look to get into a scalp. If I bet 10, 15 pips, I'm looking to make 10, 15 pips and get in and out of that trade, and then look for another 1-to-1. Look for another 1-to-1. Sometimes my scalps turn into 1-to-2s, 1-to-3s. If I hit the right one and it's going in my momentum, sometimes I bet 10, 15 pips, and then the trade turns to 20, 30, or 40 pips. And then I continue to secure, compound, and continue to go. The trade that I just lost, if I lost 10, 15 pips, maybe I made 30, 40, 50 pips before, subtract 15, I'm still up 35. Can I build on top of that 35? But I don't want to bet the entire farm on this trade if I made 50 pips today, I don't want to bet 50 pips on this entire trade, because if it goes down on me 50 pips, I give back everything I worked for today. So I continue to build what I've already compounded for the day. Sometimes we start the day as traders. Our first trade is a stop loss. Okay, so how then mentally do we react to that? If this was my first trade of the day and I just got stopped out and I'm negative 15 pips right now, then I have to look for a better setup. I can't trade this garbage. I got to be more patient to wait in order. And my next trade is not to make 100 pips. My next trade is to get my 15 pips back from the market and then to go back to break even on the day. Just like when we take a break even trade, you got to reflect on it and learn from it. So if I took my first trade of the day and it was unfortunately a 15 pip loss, my next trade is to look for more of a better setup, be more patient, and to get my 15 pips back that I lost and secure that. And then if I do that, then I'm back to break even. Maybe then go outside, go for a walk, catch your breath, go grab a drink, come back and start again. A clean slate. You're starting again fresh. Sorry guys, I don't know if that made any sense to some of you guys, but that's just how I go on with my trading. If sometimes the first trade of the day is a stop. You know, sometimes you guys get stopped out your first trade of the day. But that's not the time to go on tilt. That's not the time to get pissed off. That's not the time to go against all of your rules. It's now learn from what happened. What could you have done better? Okay, was there anything that you could have done better to in that trade? Obviously, there's something we can always do better. Some traders don't fail to understand that concept that there's always, doesn't matter how much experience, who you are, or what you are in this, even banks make mistakes. That's what keeps me understanding. Banks and institutions make mistakes too, on a bigger financial perspective than you and I. And they make mistakes. I'm sure that the bankers have to learn from their mistake and move on. So same with us. We got to learn from a mistake and move on. I look at my entry. Was there anything I could have done better with my entry? I always critique my entry. That's just me personally. I'm very, I critique myself. Was there anything I could have done better on that entry? What could I have done better? I waited for that candle bar to close. I put it, what I say, like 50% there. It came back, it got a wick, and it flipped, and I bought right there. Normally, sometimes when I buy that, it has a high probability of breaking, and we're filling up these wicks, and I'm getting my 10, 15 pips with minimal to no drawdown. It's just, it's in a range right now. So the market didn't allow it to break out. I can see that right now. So the market is ranging. It's not trending right now. So now I got to be cautious on my next trades. If I'm going to continue to trade gold, I know that it's in a range. NASDAQ, is it building off of a bottom right now? I'm going to try and get into one more trade on the call with you guys, but I don't want to force any trades. Okay, now we've got a big green candle coming up where it came to the bodies now. The body there, it kind of held. Okay, now we got a really nice bullish engulfing candle. 2.5 minutes to go. Do we just buy this candle right now because I'm upset that I lost money and I see a big green candle? Yeah, if that's your philosophy, if that's the way you trade, or are you going to stick to the principles and wait for the body to close? Because sometimes if we get mad now and we buy up there and we're mad, and then the market just, they understand our human psychology, and then they just keep shooting it back down, similar like NASDAQ. And then what do we do after we take 2 losses? Or then we get into that vicious circle where we're getting now revenge trading. We're now stepping up our sizes by 2x or 3x to make up what we're losing, but we're doing it in trading in supply, just like NASDAQ. I can show this. Those buyers, if they got upset and they got stopped out, or they didn't get stopped out, maybe they didn't have a stop loss, and then they bought their second position, and then it kept dropping, and maybe they're loading up here, and now they're getting really pissed off because they see it coming up green, getting rejected. They see it coming up, going back down. They see it coming up, going back down. So this could be starting another leg coming down. And then if this candle closes above here again, this zone I can make green again. You can now start to maybe adjust your depth of market if you like. You can make this where it could be the double bottom now, whichever zone you're looking at. Okay, the zone, I still have my yellow point of interest right in there, maybe 50% of these two zones now. And then I can see now the volume has opened up. Here's my 5-minute resistance. Here's my 5-minute demand. Is it forming a double bottom over here? Okay, kind of all this is one bottom. There's my neckline. There's the second bottom. And then now, as it's coming up there, it's getting rejected, getting rejected. Will we push? There's our neckline now. Will it push and close above, retest this afternoon, and gold is going to continue to move? Or will we lose all of this support here, and then we're going to drop a little further down into here? Okay, so just continue to watch how it's building. NASDAQ is continuing to drop down. There's bullish divergence all day on, if you've been watching this, every successive low is going lower and lower, while this RSI indicator is showing that the strength is increasing, but there's too much supply in the market. You can see the buyers are buying into that supply and getting rejected. The buyers are buying into that and getting rejected. Corey, you don't wait for candles to close? Yeah, just try that. Give yourself a test and say, I'm going to wait for bodies to close. And just try that. Back test. Test it out starting of next week. And see, it might eliminate a lot of mistakes. Because normally, if we're buying or selling candles before they close, then anything can happen. Anything can happen. At least when you wait for a candle body to close, at least it gives you more context as to how low it went, how high it went, where it closed, how much volume is in the candle, and then maybe you can base a buy or sell off of that candle. Okay. Dave and I want to make our live sessions like lessons now. Like, you learn from us. I'm not, some traders, after they take a loss on lives, you won't see them for a couple weeks because they can't handle the heat. I can handle the heat. I'm a big boy. I know that I get stopped out, whether it's on a live or it's myself trading by myself. It happens. Okay, I'm not gonna be one of those traders that says, no, I don't ever get stopped out. No, I'm on a 100 win streak, all that. You can see I'm trading with a pretty tight stop loss while I'm scalping, maybe the size of the bar. So that's the nature of game. If you're trading with a 10, 12, 13 pip stop loss and you're trading securities like gold or US 30, you're more prone to get stopped out. But on the flip side, I don't over leverage. I don't risk too much. That's the difference between myself and other traders. They maybe risk too much on that trade and then they panic when they get stopped out. I don't panic. I left a little liquidity behind. I have no issues getting that liquidity back at some point, either this afternoon or next week, but I don't leave liquidity behind. I lose some liquidity, but then it's my job to come back and pick it up maturely, not risk everything I've ever worked for just on one trade. You guys will learn that the more you get experience in these markets, that it's not your technical skills, it's not your fundamental skills. Risk management is everything. That's what will keep you going long term in the markets, if you know how much you're risking on that trade. Now, if you ask me, looking at this green, okay, this is what I wanted when I intended to take the trade, to break out of these wicks and fill up to here. But the market wasn't ready at that opportunity to do this. It needed to come back down and create a double bottom. Why? To pick up more volume now to make this move. But even if I look at it, had I placed my stop loss right below those bodies, I would have been stopped out right there. So I don't make excuses for anything. That's just how I am as a person. I don't make excuses, because had I placed it below those bodies, the market took me out right there, and then again I'm watching that move go against me. Okay, so it happens. Then when I look at that, what could I have done better? Then the only other option is, would you have placed your stop loss below that wick right there? Then you're just playing that game of just, if I go lower and lower and lower. So you got to have some sort of structure. I stick with what I do, and I know on a daily basis I do really well with this. So I don't want to just now, just because of that trade, switch everything that how I trade and just say, well, if I placed my stop loss there, I would have been good. If I placed my stop loss down there, I would have been good. That's not the name of the game. The name of the game is you stick to a particular strategy and you learn how to do it, and you stick to it day in and day out, regardless of what the volume is doing, unless you can make some corrections on it and you learn from it. But I'm not that guy that's going to sit there and say, well, if I placed it down there, I would have been okay. Or if I placed it down there, I would have been okay. No, because that's not what I'm doing when I'm initially taking the trade. So you guys will learn. Well, the more experience and exposure you have to the markets, you're going to learn. You're going to learn. You're going to learn, young grasshoppers. Even here, are we learning anything what NASDAQ is doing? It's coming up strong, going back down. Coming up, going back down. Coming up, going back down. Now is going to build off of. Now it's trading in that block. Now, do I want to start buying? Okay, what do you guys think? Is this a good time to start to buy NASDAQ? I'm being honest, guys. If you guys think it is, I'll take a buy with you guys. Do you guys think this is a good volume to start our buys now? If we are, we're speculating. Okay, because I don't see any green volume closing above anything here. What do you guys think? Should we start maybe a feeler buy on NASDAQ? Or do we wait for volume to close above some of this structure? Wait until closed above the trend line, Val? Yeah, we're not too far. See how it's still kissing the trend line? Still coming here, going back down. Still here, going back down. We still don't have like a break of the trend line. So let's just maybe continue to wait it out. I know we might have ants in our pants, but there's 4 minutes to go. And then I just want to walk you through, guys. I'm waiting for a body to break the trend line and maybe close above this physical red line. Okay, so that's confirmation number one. If that happens, okay, we got confirmation that a 5-minute candle that's bled out all the way down to this green block is now physically breaking the trend line and maybe closing above structure. Okay, then I either have to wait to buy a pullback off of 50% of this volume, how I kind of did with gold, or I got to watch how it closes because the next bar might open ignited if this closes near the high and continue to drive with this momentum. Okay, so those are the two dilemmas I have. So number one, I got to wait for this body to close if I'm not buying this candle prematurely. Got to wait for it to close. Because every time we got evidence, every time it comes up here, it's getting pushed down. Coming up there, getting pushed down. Above this red line. Coming up there again, got pushed down. We're trading right at that red line right now. Okay, so it's doing exactly what these candles did in the past. These were nice big green candles, but on the close of the candle, the sellers were present and pushed it down. Okay, so same thing can happen with this candle. But it's relatively, but this candle preceding it tapped into that bigger green box. And that's where I stated I wanted to take that. That's maybe where I could have had a pending order waiting in there. And if I did, I would have got my 15 pips back that I lost on gold, but I didn't execute that. So now, do I FOMO buy right now, or do I wait for pullback? Now we're trading right at that yellow point of interest on the daily. We're right back in our red zone. We do have a nice candle that came into here. It's trading off the momentum off of that big block. Coming, nice bullish engulfing candle full of green volume. It's just looking at this, the clock on the side, 1 minute 40 seconds. It's the hardest thing. I got to wait another 1:40 for this thing to close. It could potentially go drive through another range. But I'm waiting for this thing to close. Yeah, Xavier, maybe a morning star pattern down here. Yeah, I'm glad that you noticed that. Yeah, you got your red bar, you got your star, your doji candle in there, and then you got your bullish engulfing bar. So that could be the start of a 3 bar morning star, and it all developed out of the bigger block down there. Okay, so that's good observation. Good observation. And then gold is breaking out, guys. So gotta wait for it now. If I'm still trading gold, if it closes above here, maybe make this zone red to green. If you're still waiting for patient pullbacks, maybe here, maybe there, maybe there. If not, if you want to buy off the top, that's up to you. But remember, this is a bigger trend line, this white line, and then that red line is that 40 pip fill range. And then look at the massive rejection. Okay, so make notice, last 30 seconds, NASDAQ was that big, powerful green candle, traded right back there, and again, they're slamming it back down. So where is this final green volume going to close? Is it going to close relative to that line right there, that red line? Will it close above it or below it? Okay, so that's, again, a nasty rejection. Are they going to close the volume again below that trend line? Okay, so it closed right at the trend line, below the red line again. Okay, so again, that's a massive rejection right there. Okay, so opening. Remember what I say, is it a smaller wick that it could fill and then pop it and continue driving? This candle body has to come and fill all of that prior exhaustion wick before it can attempt to break for a new higher high. So is there enough volume in the market to continue to fill this, or is it going to make a lower high and sellers are going to reject it back down? So do you guys see is that sometimes if you take a trade prior to it closing, even a big bullish candle like that, it came right into that zone and then they just rejected it back down. Okay, so and again, they're rejecting it with that lower high, and maybe are they going to push it back down to 50% of the volume, all the way back down to where we have a little tiny bit of structure forming on these 5 minutes if we locate those bodies again? Or is it going to come all the way deep into this big block down in here? Sometimes this is Friday afternoon volume, guys. This volume is completely different from Wall Street Market Open. Had I been with you guys on Wall Street Market Open, like look at the volume kind of that you're trading. Also like gold, go back to look at the premium volume. Okay, so this is unfortunately end of day, midday volume. It's not the greatest volume. So even for scalpers to look for just small scalps, it's not the greatest. So sometimes when I see the volume like this, I walk away. I'm perfectly okay with walking away from the market. I don't need to force trades in this type of, if I see how it is. This could be very frustrating to trade. Gold could be very frustrating. A lot of these securities this time of day on a Friday afternoon are very frustrating. But learn discipline. If you can acknowledge what type of volume is trading, learn to look for, remember what I said yesterday? Yesterday's volume was fantastic. That was perfect trending volume. Pullbacks were being respected. It was making higher highs, higher lows, perfect double top patterns. I said take advantage when you got days of good volume like that, and then start to recognize shitty days like this and eliminate these days. So that's part of our job as a trader, to analyze this, to understand what is good volume to trade, and then what is volume to try as much to avoid or reduce your risk when we're trading this type of volume. Know what days it's good to increase your risk or to increase your lot sizing on like volume like yesterday. Just look at yesterday's volume at this time compared to today's volume at this time. We did these same securities, so compare gold yesterday and compare NASDAQ and like what it is from yesterday and today. And I guarantee you'll see night and day the way how it's trading. So if you recognize that, then I'm telling you, you're going to step your game up in trading. And then you're going to know that it's okay to not trade this type of volume. There will be better days. Maybe we got to wait till 2 p.m. Maybe we got to wait for 3 p.m. for the market to open up. Okay, so we got 30 seconds to go on both candles. I kind of don't like gold. I don't like the way how it's trading. At least there's a little bit more volume over here in NASDAQ. And I'm trading two securities that I don't really trade at this time. I'm normally looking at US 30 or I'm looking at specific stock securities at this time. But what are we going to do? US 30 is probably trading very choppy as well. Okay, so here we go. Again, with this natural trend line, what we had, you can see it was a false break on that big green candle. Again, like this is where I learn. I teach myself. Had I bought an impulse or that green candle, then what would have happened to me? You know where I play that woulda, shoulda, coulda game? You know, maybe that candle, it looked real nice. So I look back. If I was one of those buyers who bought up there or bought out there, I'm in drawdown now. So I'm learning too on a trade that I didn't even take. Had I taken it, what would my mistake be? So I'm thinking that was a beautiful big green candle. I guarantee you some of you guys or others bought that green candle and then it dropped down before it closed and pushed down. I could have been that buyer as well. But can we learn something from it? Regardless whether we took the buy or not, the candle did not close, right? It was driving, but then when it still 3 minutes, then it got pushed down and it closed right there. Okay, so us who are not in the trade are observing that. Okay, so you learn from it. Just what could you have done better in that situation if you bought that candle? Just wait for it to close. It's easy to say now when we look at it, but that's what we've been saying this entire session. Wait for bodies to close. If you're going to trade on impulse before it closes, there's rules to that strategy. You have to either acknowledge your risk. You got to understand that it hasn't closed, and where it closes, you got to understand that you could go in drawdown. Okay, there's no guarantee it's going to continue to break before it closes. So one rule of thumb how to fix that is wait for bodies to close. If 5 minutes is too long for you to wait and you're a scalper, look at your 3 minutes. If 3 minutes is too long for you to wait, look at your 1 minute bars. And you know, it's just wait for each candle time frame to close. Cash, you understand you still got to observe? Absolutely. Whether I'm in a trade or not, I'm observing everything. I'm also looking at how gold is trading. Now it closed above, so it's retested this 2 times. Will it hold? You know, whether I'm in a trade or not, I'm still kind of looking what's happening. Is it holding? Will it drive back up there? I'm looking for like clues, what's going on. I'm learning while I'm not in a trade. I'm watching markets, I'm watching candlesticks, I'm seeing fake outs. You don't necessarily have to be in a trade to continue to follow the markets. Like I know some traders, they're working, doing other things, and then they only pay attention to the market when they get into a trade. But they're not looking because they have other priorities. I understand that. It's a busy life. But myself, when I sit down, I'm watching 1 chart, 2 charts, 3 charts, whatever I'm on, and whether I'm in a trade or not, I'm watching everything. I'm looking for clues. I'm looking how it's building. You know, that's the game that's the patient game. And even to scalp, sometimes when I'm just looking to scalp for a few pips, sometimes I gotta observe for 30 minutes, 1 hour, sometimes 2 hours in, and I haven't even taken a trade. Those like I don't force trades just because I'm a scalper. Swing trading is much easier, less anxiety, less time you're observing the market, and you're just holding a trade for multiple days. And hopefully it works out in your favor. You're doing the same thing that we are doing as scalpers, but you're just doing the same shit on 4 hour or daily candles. And then when you place the trade, you're not watching it like how we are. You place your trade, you put your appropriate stop loss, put your appropriate TP, and you let the trade develop. And some swing traders hit profits, some swing traders hit stop losses, and some swing traders as well hit break evens. Same stuff we go through. But yeah, it looks like the volume is kind of dying off this afternoon right now, but maybe the volume will come back after 2 p.m. leading. There will be volume at 3 p.m. power hour. I can guarantee you guys that. Power hour, the last hour of Wall Street on a Friday, will have volume, whether you believe it or not, because there's a lot of swing traders closing swing trades for the week. There's swing traders looking to take positions over the weekend into next week. There's intraday traders who are maybe trading on the hourly time frame. They're up in profit maybe. They're looking to secure some before the weekend. There's intraday traders who are in drawdown and they're thinking about, should I hold this trade in drawdown over the weekend or should I just close it right now, accept the loss and move on? There's scalpers who in the market, like myself, I enjoy that volatility the last hour because I'm looking to make 10, 20, 30 pips, whether the market is selling off or it's going back up but there's a lot of transactions in the last hour of the markets from all style of traders. So you're going to see some incoming volatility from 3 p.m. to 3:30 to 3:50 right into 4 p.m. Okay, so when I start to see, like, I want to figure out where the bottom is. Figure out where the bottom is. The bottom might be over here. Is the volume thinning out? Are sellers, like, is the selling volume starting to thin out down here? And then maybe the buyers will step back into the market. I also look at the volume. Like, are you getting big red bars down here or are we getting some thinner volume candles? So right now it's showing us we're getting thinned out on volume with buyers and sellers. So we might have a reaction coming up in the next 10 minutes. It's going to be 2 p.m. Again, a new hourly candle will be opening. We can look again at our hourly time frame on NASDAQ. It's going to show us we're still bearish. Okay, so it's very, very bearish day. Starting at Wall Street, 1 hour, 2 hour, 3 hours, 4 hours, and our 5th hour of completing to bleed out this market. So the hourly structure, we took out this supporting area and dropping. So they're filling this imbalance. Now, you can see, guys, that's why I'm saying, will this green zone hold this afternoon? It held here in the past. If this breaks and it continues to bleed out, where could it go? So my next thing I look at is, how did the 1 hour candles trade below this green block? Is there any structure anywhere where I can see? The first line of structure that I see is potentially this area right over here. I can see how this green bar closed above. It respected it. When it pulled back, it just broke it, but came back in. And then look at the green bar, how it closed. It respected the white line on the pullback. Respected. Here it kind of just went down, closed again. White line holding. Here the red bar closed below. Retest of it, pushed down. Here we closed above it. The retest held it. Here we consolidated right around it. Liquidity grab, big green candle, retested it, held it. Here's where they really dropped it down last Wednesday, but brought it right back up and closed above. So If we continue to break this green box this afternoon, that's my next hourly point of interest. That's where I would assume buyers would step in there. So I'm just kind of mapping out if this thing continues to fall. RSI on the hourly, I know this, is down to 22. And it could continue to drop. Just like the 5-minute RSI went down to 7. It could continue to drop down. However, we might see maybe a relief in the market of just a bounce, okay, and then back up to this zone. So if I am now measuring zones, if I'm buying off this green box and it comes up, what is the entire zone? Let's just see what the entire zone is. About 60 pips is the entire zone from the green to the red. If it comes up to structure, where do we have 5-minute structure? Right over here. Now we can see those bodies are still held below there. It's just a wick, a wick, a wick, a wick, a wick. Buyers were strong in there, but look at the close of the candles. The sellers closed it back down. So if I start to buy anywhere in this green box and I'm looking for it to come up to that red line, that's about 40 pip buy. 40. From anywhere in this green box up to just that previous resistance is 40 pips. I could definitely recover the 15 pips that I lost on the gold trade prior and maybe make an extra 10, 15, 20 pips. But again, maybe I got to wait going into 2 p.m. or see how it reacts here. Because I know it could just continue to come up a little bit and then continue to sell back down. And then there's that white line below there. If I really, really want to get intricate, now what I can do is look at the last time the 5-minute bars traded below this green box to that white line and then get my scalp areas. Okay, see right here, now I'm really looking in on the 5-minute candles. I can see now there they broke, went back up. There they really broke it down relative to, look at, there's my tweezer bottom lows on the 5 minutes. Okay, right now this is where I do my analysis. See right there where it dropped? Okay, I placed a red line there. And then I see relative to the next pullback was higher lows and started that. Next pullback, higher low in the green box, started that run. Next move over here, see where they really dropped it? Red, red, red. Look at where it stopped. Exactly right at that low. So they're protecting it right here at 21,681. So maybe I'd like to position a buy in there if I get that opportunity. It held in the past 2 times. There it is. There's that red line. Okay, so let's watch how we're going in. We're only 3-4 minutes away from 2 p.m. Let's continue to watch how we're trading into 2 p.m. Xavier, have a great weekend, man. Okay, and for gold traders, you got a nice green physical bar close above the highs. First thing I do, I don't know, I just have a habit of doing this. I locate 50% of that green volume. So whether I'm looking for a pullback buy or I'm looking to maybe sell the market, I just want to see what happens at 50% or below. Or if it comes back down, will it continue to hold and continue to drive? Okay, so that's a pretty big volume-based candle compared to all of these other ones. So right away, I locate 50% and I look at what happens after that. So we're 3 more minutes to go and we're leading into 2 p.m. New hourly candle. I'm going to say again, new hourly momentum, new volume coming into the market. There will be news also. Sometimes at 2 p.m. there's news in the market. For some securities, again, a 4-hour candle is opening up. So that brings in 4-hour momentum in volume. So I look for clues as much as I can, like how it's going into 2 p.m. What are they going to do? Are they going to come down, take out the liquidity, flip it back around? Will it be a red candle close below and then they continue dropping the markets? All of these things I like to observe. So my stop got hit there. I look at it, it was a little tight. I don't like to trade with big stop losses. Okay, so let's pay attention now to both securities, whatever you're trading. Let's see what we got here. And then you can see the bullish divergence still building, even on this small legs, this lower low, this lower low. If it drops even further, you got a higher low, higher low, higher low. Just on this, it's showing bullish divergence. If we look at the overall structure, like you see it dropping, and then you see this. So it's showing like 2 times double bullish divergence, but it's just we're falling on higher time frames. So it doesn't matter what the 5 minutes are telling us. We're falling from all that hourly, 4-hour, daily supply is still dropping the market down. So if we're buying and we're looking for buys, they could just be short buys. You know what I mean? Like right up to this red line. We've seen it break a few times with no volume close. If we get a bar that closes above, it could build off this and then fill. Then we break maybe to our next. They just fill this imbalance. And we got to understand buyers could be there. And then if you get a really nice move up to there, you gotta understand that this could be a heavy selling area, because now you're trading near that daily point of interest if the market rotates back up there. Because sellers could they could be here at this red line, they could be here, they could be here, and they're here. So if you're in a buy and you're driving in there, you have to acknowledge that it could come down anytime. So then you would be taking your stop loss to break even, securing your profit as you're moving up, unless you get the volume bars closing and respecting this, and you're building a little bit of structure to the upside. Here's the close. 9 seconds, guys. Get ready. Okay, so they dropped it inside here. It's going to close red. Okay, red in the green box. Again, do we have 50% of that red bar? I can see that ignited red bar. Yeah, that's about 50% of it. I can bring it up to those natural bodies right there. Okay, so we got a green body opening in a green zone at 2 p.m. Okay, do we want to just buy because we just see the green candle for the first 20 seconds? Some traders do, but you got to understand you got to go green against a big red body candle that dropped in here. Okay, but I also watched too within the candle. It came up right there, tapped into 50% the red line. They pushed it down. Will we start to get green volume filling again? Okay, I'll zoom in so you guys can see this. Okay, so you see how it retested right there, that red line, 50% body to body, and they're pushing it down. We still have a higher low in the green box. Is the green volume going to continue to come in? Look, the sellers might be still, wow, they might flip this candle. There, they flipped it, shooting star. So what it wants to do is take out that low and create a new lower low. It's a shooting star candle down. So all those early buyers at 2 p.m. that just entered, because the candle flashed green, they're momentarily in drawdown. Okay, so we made a new lower low. Will it come all the way down to, remember this was tweezer bottom low red line, this 21,681 from in the past. Will it come all the way down there? That's where, there could be a wick come out of there. Or it could break for a new low. Because there is a little bit of liquidity right below those tweezer bottom lows. The market can see it. Will the market come down there and grab it? Saying Nvidia and Google are down -2%. Yeah, it looks like it's red across the board. Okay, so look guys, we came down a little bit, created a new lower low, coming back up. It was a spin top candle. Let's continue to watch this volume. There's tug of war between some buyers and sellers here to start the first 5 minutes of 2 p.m. And I believe, guys, I haven't double checked 100% the earnings, but I believe next Thursday it could be Nvidia's earnings. Nvidia is a pretty big corporation in the world, and they are big player in the S&P 500 and NASDAQ. So we'll see next week. If it's not next week, it's the week after. I believe it's next week, end of February. If you want to check real quick, earnings right over here, earnings calendar, Monday of next week, real fast. NVIDIA reports after hours. Home Depot next week. Oh, we got to pay attention to Home Depot. What else we got? Real quick. Lowe's. What else we got? NVIDIA. There it is. Date Wednesday. Sorry, Wednesday. I said Thursday. Wednesday after the close. Okay, 4:20. Everyone, smoke a joint at that time and watch NVIDIA earnings. And listen to forward guidance. I cannot stress the importance of what forward guidance is. Okay, they will release the EPS and the revenue. Okay, they might beat the analysts. It might be a beat, just like Walmart had a beat, but that was to the prior quarter, prior to 3 months. That was during the holiday season, Christmas season. But their guidance was not very good. That's why Walmart was down 5, 6, 7% yesterday. So NVIDIA will release their earnings. Might be both green. They might be beats. They might miss. Every earnings, they keep increasing the bar higher and higher and higher, and they keep beating it. So we'll see if they beat, but listen to guidance. Guidance. That's what analysts and the market is listening to. And that could dictate the way how the markets move for the next few weeks, next few months. Okay, so what is going on? We have a red bar pushing down, still bearish. Is it going to come all the way and tag into here? If it closes red below here, I have to unfortunately flip this green box to red because this could signify a little bit of short-term supply and resistance still in the market. So it did in fact close right below it. So real quickly, I know if I'm buying, I still know that I'm buying into supply. Can I now continue to place my red line down with 50% of that bearish candle? I can, right there. Okay, so will the selling pressure continue to come right there? That's where we had a 5-minute tweezer bottom low looking in the past of this week. We know that there's liquidity down there. Will the market come down and grab that liquidity? Then maybe that will trigger the reversal in the market. Or will it start to build where we don't need to come in here? And the depth of market is already building. Buyers are building above to protect this support area. Okay, let's watch it out. Let's see how it plays out. I'm just bringing this natural trend line down. We're still below the trend line. Like it's very steep. It's kind of like parabolic, lower lows, lower highs, lower lows, lower highs. So like look how steep this trend is. Gold is, look, it's barcoding. Green, red, green, red. It looks like a double top within 4 bars over here. Up, down, up, down. It could come all the way back down to there. So we're building a little something. Green candle, okay? 3.5 minutes to go. It's retesting 50% of the volume. Got an initial rejection. Can we start to get our buyers coming back in? No, the sellers are back in, pushing it back down. Okay, that's why these are called spin top doji candles. Right now, the way it's forming, indecision still down in here. Morocco, can I show where I showed the NVIDIA earnings? It's called Earnings Whispers. Earnings Whispers, right here. Earningswhispers.com. It's all free. You can see all this, okay? Earningswhispers.com. It will. I suggest like you're over the weekend, go through the entire week. Monday, Tuesday, Wednesday, Thursday, Friday. See the big names like how I went through it. Home Depot, the Walmart was this week. Look at NVIDIA. Look at the big names and pay attention to those names. Especially if you trade NASDAQ, you would want to know what NVIDIA is doing. Okay, guys? So this could be where now gold is pushing down. Remember that bigger trend line I have on the hourly? So we traded right into that trend line and couldn't get up to that resistance, 29.43, and now it could be coming down. Okay, so this is like just a quick little 4 individual candles, but it's a double top. Came up there, came back, came up, and then dropping it. Will they drop it down? Will it close below? All of these things, okay? I'm really interested to see what NASDAQ is doing over here. Just want to watch this close in the last 2 minutes. And guys, for everyone on YouTube, we do have that free Telegram channel. It's right over here. The free Telegram is pinned at the top. If you join this right over here, kind of shows us everything we do here. Okay, all the trading with Dave and the New York sessions. This was the big sell this morning, caught with the our alerts, everything like that. Okay, so and then our blogs, everything that we post in here are for you guys available. Okay, so 60 seconds to go on both securities here. Can the buyers close above 50% of this candle? Show a little tiny bit of strength just to close above 1 bar. We're not asking for much. I'm not asking for this green candle to close all the way up here. I just want to see, can you close above 50% of this bar? Okay, so last 30 seconds, I always pay attention to the last 30 seconds. So I see it came down gold, red, 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 but look, it's coming right back up. So if it closes above here, you could continue to extend and continue to drive through here. NASDAQ, let's see where it closes. Is it going to close right below the red box and continue to drop down a little further and then come after this liquidity down here? Here's the close. Closed right at the red line. So sometimes you're going to get a ignited, maybe a bullish push, just break out of here. It's just kind of like when you close a candle and then it's still got the momentum left in the candle and it just breaks out. But sometimes when it just breaks out, you're breaking out into resistance. Okay, so I can see it kind of just broke out a little bit, like right there, came back down. Will it come red all the way back down, take out the lows? Or are we finally starting to maybe build a little bit of depth of market down here? Selling pressure is still strong. It's still there. It's clearly there. Markets are extremely slow this afternoon. Okay, they're very slow. Unless you are in that sell and you're holding, congratulations. But for anyone else who's not in a position right now, this is slow volume. This is I don't know if I would stay here this long with you guys if I was here by myself. I highly doubt that. Okay, but you see how it came up green and then right away they flashed it down red, so it triggered an order. And okay, this could be the candle that bleeds it out. It could come up strong with a reversal. So this is where you really have to pay attention to here to see what happens here. Yeah, Rob, a lot of delta negative volume. Yep. You can, it's clear to see it. You don't need a depth of market in order to see the negative selling pressure today. Just look at your daily candle. Should tell you everything you need to know. Do you guys get frustrated trading this type of volume, or are you guys okay with this volume? Do you guys understand like patience is required? The market presents us this type of volume on various days. This could be on a Tuesday. This could be on a Thursday. It's on a Friday. But so I know a lot of traders that like they get I don't know what the word is, but it's just they don't know how to be patient with this volume. They're forcing too many trades, and then it's causing a lot of confusion. Just take your time. Let's see if it gives us any clues what they're doing. And then I kind of don't want to buy the lowest point because sometimes when I do that, then the market retraces back up. So if I'm selling, I'd like to sell, here or here where the sellers are. I don't want to sell where the buyers are maybe populating themselves. So now we got a nice, strong answer so far. Okay, it came down, they took out the low, coming right back up strong. It did have enough momentum to break above there, but again, how will the candle close? Will it be a big hammer candle coming through here? Will the sellers reject it back down? Okay, so again, this is that theory. Do we just want to buy off of this candle with 90 seconds to go and just hope for the best? Or can we wait patiently for another minute and wait for the body to officially close? That's what I'm going to do. I'm going to wait for it to officially close and then go from there. Strong answer by the buyers so far. 60 seconds to go. Wow, Monday and Friday is most profitable for me. That's good. Continue journaling. See what you're doing good on the Monday, Fridays. Some traders say Monday, Fridays are their worst days trading. So everybody's different, okay? Everybody's different. Okay, so you can see it kind of came up to equal high right up here. That previous high wick. Pretty equal. 50% of that body. It came up really strong. Equal high. They rejected it back down. So now we got to watch to see if it's going to continue to build in here. Maybe I can place a feeler buy off the next candle. I can see what's going on. Let's see where it's going to close. Okay, so I just kind of lift this red line up to about 50% again of that volume. This is what I did with the gold trade earlier. So let's see it red coming down right there. Now it touched physically right into 50% of that prior green volume. Now it's got a wick. This is similar to what happened with me with gold. It kind of wicked out of here and started to turn green, and that's when I bought that green candle buy, and then it started to come down. Okay, so do I want to make that mistake again? Or do I want to stick with my principle? If it respects this, do I continue to buy? Or should I just wait for some confirmed volume to show me a little bit of strength? Okay, so these are the things that goes through a trader's head. The same exact situation that happened to me over here where I got stopped out, now it's presenting itself again. Do I go with it, or am I now fearful that the same thing will happen over here and I get stopped out again? Okay, but right now, as it came down there, it didn't come up green. It didn't even flip. So it's still coming down red ignited, red engulfing. Okay, so now, big volume. Now let's see, will it be a big rejection coming back up? Like sometimes you're going to see like these moves where this one, wick, and then they dropped it. If we get a nice wick coming back up, this could indicate that the market could be potentially reversing. But this is a heavy red candle, and I still don't see a sharp rejection from the buyers. So this is where now the markets are starting to get interesting. You can see the battle now. Okay, so it came down there again. Are all these wicks respected? Yeah, higher low, still holding. And now the buyers are there, but they got to go up against this red volume. Now let's see if the candle will flip, or sellers are still going to push it down. But then we're kind of right in the consolidating phase, right in the middle. So this is the type of day it is. It's tough. I'm just going to remove this trend line. This is getting in the way here. Okay, so we can focus what's going on here. Regardless what happens, I think I'm going to be here for another 15 minutes till 2:30. I need to take a break. I've been sitting in this chair since 11, and my back is killing me. Okay, and can I place, like, just to show, are we building a little bit of green, like that little tiny zone? Can we just continue to build off of this tiny little zone right here? Continue to hold this, maybe show us that it just dropped down, back up, drop down, back up, drop down, back up, drop down. But let's see where this body will close. Can it close above here? Can we build off of this? Maybe we don't have any more red closing volume below here, unless this candle wants to continue to come down there. Apichi, it's frustrating, but that's part of trading. It happens all the time. I like perfect that you understand that. Like every trader who trades understands that there's going to be tough volume to trade on all time frames. Sometimes you see hourly candles trading like this if you're an hourly trader, and it's frustrating. Sometimes you see daily candles trading like this, and it's very hard on daily traders to look for a possible position to swing for a couple weeks. So we're on 5 minutes and can show you how frustrating it can be. But the only thing we can do is kind of, when we get into a trade, is just know how much you're risking. That's it. Like if I'm going to take a trade and I'm only risking, let's say for example, I'm just throwing a whole number out there. If I'm risking $50 on this trade, 50 on this trade, I ask myself, well, that $50 that I'm risking, if I get stopped out, is it going to demoralize me? Is it going to destroy me as a trader? Is it going to destroy me, my psychology? Is it going to destroy me financially? Am I betting my entire grocery money on this trade? So that's where you have to come to peace with yourself as a trader. How much are you risking on this trade? If you're already up, let's say for example $100 on the day, maybe you're risking $20 of that profit, and if it gets stopped out, you're still up $80 on the day. You're not risking your entire profit on one trade. That's what keeps me continue trading every day, because I don't risk too much. I control my risk. Once I hit my daily goal, I have the discipline to stop trading and get out of the markets. Unless it's trading good like yesterday. Today it's much difficult compared to yesterday's volume. And look at, you got a heavy red bar. Wow. Closed it right near the low. Here's that liquidity. And now, this is where you gotta, are we buying right now? Okay, like, you're coming off of that big red bar. That zone we had is now red. Okay, and then the big one, I kind of eliminate it. Okay, because I follow this one right here. Kind of clean up what's going on here. And look, it closed right. It could continue further drop. Holy, the markets are really bearish, really bearish. There's no opportunity to even position yourself to look for a nice natural buy to develop. Everything is lower lows, lower highs, lower lows, lower highs, lower lows. I thought maybe we were going to build off of this a little bit, create maybe a double bottom and then start to reverse. The market is saying no. The market is saying we're continuing to sell. For all of the sellers today, congratulations to them. Like, they're doing exceptional. So we know that prior red line all the way back here, right there on that day, Thursday, 4 a.m. Eastern, it broke. Okay, so lost all that short-term support. And how deep is this thing going to sink? This is that white line here, 21,648. That there is a higher time frame area of support. So here, a little bit above, a little bit below, make it green. Now, I'm not looking for 5-minute buyers. I'm looking for hourly. I'm looking for 4-hour buyers to step into the market. No, I didn't take a trade Dama on NASDAQ. Not yet. Nothing. So this is where, unfortunately, you got to go to a higher time frame. Like 5 minutes is not enough to tell a structure. You got to go look on the daily now. Okay, for real. Let's look at where this thing is dropping. Okay, look at the daily candle. Okay, it doesn't even have a wick. Okay, and if we're 5 minutes trying to buy that wick, yeah, it might be just 5, 10, 15 pips, but look at what's coming down. Okay, so number one, what is below this white line? Where do we have daily support? Right here. This is where I would place a yellow point of interest right here. That would be, if I don't see buyers step in here, and the market could continue falling. Okay, why did I place it here? There's a wick, red candle, red, that dropped right there. There's a wick there, body that opened there, wick, a body. I can continue look across, but so this is a heavy daily candle. What about the 4-hour? Okay, so the 4-hour, we're feeding off of this one. This one opening ignited and we're dropping. 4 hours. See, I see right here, that's where I have that 4-hour bounce. and then there was that next lower low. Okay, so are we going to get any kind of support at this white line right now in the lower time frames? If it cannot hold, could drop all the way back down to that red line. Like look at the 4 hours. You look at the hourly. Our candles are just pushing down. I know everything is overbought. Your hourly RSI is down to 1920. 15 minutes, like 15 minutes are continuing to push down. The 5 minutes are still bearish. It's not easy to look for buys today. So sometimes when it's like this, I don't even look for buys. Just let the market go where it wants to go. Friday sell-off. It's a traditional Friday sell-off. Okay, so now it's trading right there with 40 seconds to go. I don't know how much I can stay on this call, guys. My back is really killing me. Unless I get up for a couple minutes and just walk around. But let's get through this for 5-6 more minutes till 2:30 and see what happens if we can maybe start to see the market rotating. Okay, so it's still red candle. Yeah, guys, don't fight the trend. I just continue to look. Will we get a physical green candle to close above something? Maybe to look for maybe a just like a, even if it produces a wick on the daily, just closing a Friday, maybe just to are the buyers going to be here present next week? So this is where I'm kind of seeing, will the daily candle form a wick? But where? Will it form it at this point of interest white line at 21,650 right now where it is? Or will it start to form a daily wick right here at 21,585? And in me as a scalper, I know I'm buying maybe the daily bottom, but I'm looking to be part of that wick that's produced. If there is a wick on today's daily candle, there might not even be a wick. It might close bearish engulfed and strong and then send a message going into next week. Okay, so man, I didn't want to say it, guys, but I kind of was leaning to maybe selling gold right there. Woulda, shoulda, coulda happened. You see how it kind of just at that trend line, kind of just red, green, came up again, red, came up again, rejected, lower high, lower highs off of it. This candle kind of closed above all of those wicks, and in the start of this one, flushed down. That was probably a good opportunity to look for a sell. Okay, now we got something developing with NASDAQ. It broke that white line, broke below there where I had that box. Now, this is where I'm looking. Will this officially create today's daily wick on NASDAQ? Okay, it's not easy to figure out the exact wick of a daily candle, but sometimes as scalpers we can figure this out depending how it builds here, because we know we're just dropping into higher 4-hour point of interest. We know we're dropping into hourly areas. Like And yes, I understand it's completely oversold, and I know that is showing bullish divergence, but it's still not there. We got to figure out where these higher time frame buyers are going to step in the market, and they're not stepping in. They're just non-existent today. They're just allowing the market to continue to, so they're pulling their orders. They're just pulling them out of the market. And that's what's allowing the market to continue to just drop and continue to fill these imbalances. If this body closes below in 60 seconds, what I would recommend is if it closes below here, you make this green zone red, because if it comes back and retests this and continues dropping down, we could start to see gold starting to push down this afternoon. Holy, very strong NASDAQ on the selling. Was the market due for a sell-off? Was there anything that happened news-wise today to justify this? But that is an incredible drop all the way down to that daily point of it. Holy shit, like they are just completely just dropping the market today. Wow. Like not any, no high time buyers in sight today. If they are, they're getting just holding more and more in drawdown. This is just one of those Fridays. Sometimes you just got to watch it and just stay away from this. It could be like a trap, you know what I mean? Unless you got that bias to keep selling, to keep selling, to keep selling. Okay, so we close below there. Green to red, just continue. I want you to see how it will react if it comes up here. Okay, so you see how it's coming up green. It retested that yellow line now and coming back right up green. So we'll see now, will this start to be resistance and start to absorb this green volume and continue push it down, or are buyers going to be strong, break through here, close, and then maybe gold might have a leg up. Okay, so now we got a nice green body. Again, 4 minutes. This is the first 1 minute, but we just broke a critical point of interest, and we're getting really close to that daily point of interest. Is this going to be the start now? Okay, will this officially ignite the buyers on the higher time frames and wake them up, and this is going to start to produce today's daily wick? Again, it's a nice green candle. Should I buy it right now? And yes, it could potentially, with this volume, continue come up here, or it could just continue doing what it's doing this entire afternoon, just come up and then they push it right back down. So I kind of don't want to play that game today, where I can see all of our other friends in the market who are buying, they're leaving their evidence behind. They're trying to buy, but they're getting pushed down, probably getting stopped out, or holding them further and further drawdown. I see there they tried to buy, not successful. I see there they tried to buy, not successful. I see now they're again coming in, but I don't want to be playing that game where it just comes up and then it goes back down. I want to see strength in a green candle, close above. I want to see two bottoms, not just one. I want to see double bottoms. I want to see something that, maybe a double bottom in the second leg is now producing. Just show me anything that the buyers are even breathing today. Otherwise, it's just going to continue falling. It's just going to continue falling. There's the first retest of that red zone, that green volume that came in there. They got rejected and coming down, but it's still building, coming right back up. Now we've exhausted 2.5 minutes. So 50% of our time frame on these candles is gone. Now we got to watch the second half. And this is the start of a 2:30. So this is a new 30-minute candle that's opening the market. Is this one going to give any excitement or show any green volume entering the market? Prashant, which broker is good for USA clients? I believe ICC Markets. I don't use them, but I think they're available for US, and some traders are saying it's a pretty good broker. I'm not, guys, don't quote me on that, but I believe ICC Markets is for US, and pretty favorable for spreads. I don't know. I don't live in the US. Okay, so it's a strong candle. Remember, this one was a very, very strong candle, but then before it closed, they rejected it back down and started that next leg down. So again, we have a really strong engulfing candle. It's going to close in 70 seconds. So it might continue moving. It might get rejected back down. Will it close above here? Can I buy off of this block if it closes above? All of these things. Can I wait for maybe another pullback down into here to buy the second bottom? All of these things. If I'm looking to entertain a buy and see maybe this could be where the daily bottom is going to be now put into the market, again, but it takes time. It takes time to develop. And I want you guys to know that maybe there is going to be no daily wick today. Maybe this selling pressure just continues, pushing down, pushing down, pushing down. So now we have 30 seconds. So I see, again, impulsively broke out of there. Nice big green engulfing candle, but they're pushing it down, concentrating the volume right again at the box there, the zone. Same with gold. You see how it's right trading at the zone right there. Okay, so we closed. If we do come back down, if it does scale back down, again, now what I look at, I have two bodies to base any analysis off of. I got the red body, I got the green body. Those little tiny wicks below, but they're higher low wicks. We still have not came down into that deep daily area. Okay, so are the buyers now maybe starting to make something, build something up here? Maybe they don't want it to come down in here, and then they're trying to build a depth of market. Okay, it's all about building structure. So if it comes back down red, will we at least maintain? First thing I look at, line of defense, is 50% of that green volume that's left in the candle, which is right here. Okay, I just want to see if it comes down red to 50% right there, will the buyers be present to protect this volume in the candle? It might be a higher low. Okay, like right there, it came down, it didn't come into 50% yet, it made a higher low. So I know that buyers are asking to trade in here. But then when they were, it came back down red. Now, will it actually come back down to physically 50%, or is it still holding a higher low? And then I count in my head, how many times did it come down there? 2 times, 3 times? Okay, maybe a 4th time. Will it hold 4 times, or will it break? Okay, it came down again. It went back up 5th time. Still holding. Has not broke this low on this particular bar. Okay, and I pay attention to this in case I'm going to place a stop loss. All of those things. I pay attention to how many times it holds. Okay, now we got green volume coming back up. It comes up. It goes back down. Spin top. Okay, so this is the indecision between the buyers and sellers right now in this block, and the sellers are still winning, and now they came back and took out the low. So now it's officially testing 50% of the volume. Now, these are where those pending buyers are probably waiting in here to get in at 50% on a discount. So are they going to be present here? And okay, so maybe they got triggered, but the volume now is coming deeper down. Red, green, red. Okay, so is it going to have a higher low? Are we taking out, or are we going to see it go back up? Maybe the next candle will come up green. Then we might have a double bottom producing these single bars. Whoops. So you see how many times buyers can get faked out of this. Okay, so it came down, coming back up now. Again, 2 more minutes. Will the volume close above 50% of the green candle? Will we close near the high? Will this candle flip? Maybe intuition is telling me if it builds, maybe we might have a green breakout. Maybe that's maybe where I'm looking to take an impulse trade maybe. Like all of these things are going through my head. But I just continue to look at the volume. While I'm looking at that, anticipating that, the volume keeps coming down red. Gold looks like it's going to break and continue to push down. There's the little flag. It couldn't break the red block, and now they're going to maybe potentially drop it down even further. Okay, so they broke the low as well. Okay, so they created a new lower low. That's showing you how strong the selling pressure is. Showing you how these zones are still maintaining this red volume, pushing down. Now with 60 seconds to go, I wait till the close of the candle. I can play back exactly what happened because I watched it. I knew what's happening. Where will it close? Will it close again above this red line? Will it come up a little higher? Will the sellers close all the way down here? Then we could bleed out back down to this. And then if it comes down here, that could be potentially a good buying area down there. If this red candle on gold closes below that yellow line, we could get further continuation to the downside. Okay, now, last 30 seconds. Remember what I tell you guys. Pay attention to the last 30 seconds. There's a lot of clues in the last 30 seconds of a bar. Showing now the buyers are stepping in. How will they close it? They're going against this red volume. They're pushing it up. Sellers are still absorbing them right now. Okay, so here's our close. Still have red volume, but we do have, again, relative to our bodies, our structure, the volume is still above. Now we got a bullish ignited candle that just opens again. Okay, so this is what I was talking about, that 4-bar double bottom, what I was talking about. It came down, came back up green, came back down red. Can we get now the 4th bar green to do this and then to potentially break out for the new higher high? Okay, so this is like a double bottom but with 4 single bars. Okay, scalpers look for this particular pattern because sometimes they do play out. There was a nice ignited drop. Shit, I wanted to sell gold there and make up my 15 pips back. But sitting here watching this NASDAQ. Now, lots of selling pressure. It's an ignited red bar pushing down. Can they take out this lows of this green box and trade down into here? Got a nice drop. Okay. This volume sucks. Like, it sucks. I don't know how to make this interesting for anybody on this call with NASDAQ. Holy. Even for a scalper, like, this volume is horrible. Even having patience in the market is frustrating. You're waiting, you're waiting, you're waiting, you're waiting. On normal days, like when it's not a huge red candle like this, we're bouncing off of this white line. We're bouncing off of this line. You know what I mean? But today's a heavy daily selling candle. There's nothing you can do about it. Like, it just, you got your finger on the sell button all day, but to buy against this is where traders have a lot of difficulty. So that's why I'm trying to guide you guys by just understanding the buyers are showing no strength today. Absolutely no strength. Strength is not on just one 5-minute candle. Strength is, can they at least close it above here? That's it. That's all I'm asking for. Just come in, close it above here. Show me that you got the strength to do that. So buyers are just pulling all their orders out of the market, showing no strong depth of market. That's why it's easy for selling volume to just come right through here and just continue cut through all of this. Same with gold now. And this volume could move into next week, guys. Okay, so if next week opens red, it could be following today's daily red volume, depending on where our daily candle closes. Will it form a end of the day wick? Will it close right at the low, just like a 5-minute bar? Will it close like this? Will you see today's daily candle close like this, right at the low? Will it close with a wick this size? Like all of these things. I look at that stuff. At the end of the days, I look at that. I'll save it for the weekend and verify where gold on the daily closed, where NASDAQ did, where US 30 did, where all of the securities that I trade, I'd like to see how it closed. That could dictate how the way I'm moving next week. Okay, so we got a little green again. See how it's in the consolidated area. Bars coming back up. Here's the close now. So that's that second leg coming up. Okay, so the buyers are still there. Again, volume is staying above our structure. We got the wicks down there. But now it's really consolidated, like right inside here. There's our consolidation. Okay, so will this start to produce something? Okay, it didn't officially close above there. Naturally, red, are they bringing it down? Still, so you see that red line that I had in the past? I still use it right now to see now, will it hold? Will it be another red engulfing candle come down? Will we get a higher low inside this accumulation area? And the buyers now are showing me at least they're accumulating a little bit in here. Wow, so look at gold. Closed below green to red box, ignited, push, break that low, and continue drop. Don't be surprised if you see gold fall into this green box. If it does, the only thing that can stop it is right there. 50% in the green box at that low wick. It's ignited and dropping. Could bleed all the way down there potentially. Yep, there it does. It's coming down. Wow. I made another error today, guys. I really wanted to sell that move right there, and then I had a bear flag down in here. I missed, and then this ignited bar too as a single bar sell. I'm too focused on NASDAQ over here and losing focus on gold. But holy shit, wow. That's why, guys, I'm telling you the honest truth. When I trade, I don't do multi-securities anymore. I used to do that years ago, and I just find that if I'm too focused on this one, I'm missing out on critical moves on this one. If I'm too focused on this one, I could be missing out on critical moves on this. That's why when I trade personally Wall Street by myself, no distractions, I trade US 30, put some music on, and I just trade US 30. I follow US 30, the good, the bad, and the ugly days, but I'm focused on that. I used to do multi-security trading. I had 10 charts, all multiple frames. But I found that I'm at my best, like myself personally, maybe you guys are too, when you're focused on just one security, one bias, just watching it. Because when you start to look at different securities, they're different asset classes. It can change your psychology, what you're looking for. Maybe one is going green, the other one is selling, and then it kind of confuses you. Maybe both are selling. I don't know. It's just, I'm telling you, for me personally, I figured that out about myself through a lot of back testing, and I said to myself, I'm at my best, and I've compounded my account when I'm watching one security, and that's what I'm trading. Whether it is good volume, whether it's bad volume, whether it's consolidated volume, I just stick with it because then I can follow all of the moves and I remember everything that happened. I'm trying to, and then when you start juggling 2, 3, 4, 5 securities, or you're flip-flopping, you're looking at news, you're coming back here, you're going to miss out some critical clues. And I'm talking for a scalper, as a scalper, because I'm trading 1 minutes normally, or 3 minutes. So you got to really pay attention to everything that's happening, especially on the 1 minutes. If you miss out on a few 1 minute clues, you could miss out on a potential scalp. So same thing. If gold keeps breaking down each one of these successive zones or structures, what I do is I just continue with the zone. I don't change the size of the zone. I just leave it where it is or stretch it into the future. And if it does close below, I just make it red. Then I know if buyers are buying, they're buying into the supply. Maybe sellers are going to continue to push it down. If buyers can close it above and build off of it, then I might get a buy to fill that imbalance right back up to this zone, right back up to that zone. And then I just trade from filling imbalances as a scalper. There might be an opportunity to buy NASDAQ. Yeah, it's okay. So we got a wick, we got a wick, we got a wick, we got a wick. The volume is still concentrated in this flag here. Is it building? Yep, it could be starting to build, but still red volume is showing us that the buyers are still not showing strength yet. They're there, but they're not showing any follow through yet. So there's the close. Below there, I go green to red. And continue analyzing, and then pay attention to this short wick. Okay, so if it just breaks, look, they couldn't even break that wick right there when it opens. If it did, it could have bled out just a little more. So they really saved it just when this bar opened. So it could come back up green, 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 but look at how much red is you're going against. So there's that fair value pocket right there, and it was from our former structural zone. All we did was just change the color. Now we got a nice green candle building. Okay, so will it start to break out? Yeah. Is this maybe an attempt to take a buy? Okay, the way it's building, maybe I'm going to do this, guys. I'm going to go in impulsively and trust that this is the bottom. Okay, I'm going into a buy on NASDAQ. I know I'm going against today's principle, I'm not waiting for this bar to close. I could be making another critical mistake. And let's see if Ron is making a big mistake. My stop loss now, okay? So I could keep it right there below that last low. But knowing how the market is going today, they have a high probability of coming back down here to take out that low. And if it takes it out, guess what? Then I'm taken out of that trade. So if I really think that this is going to be today's bottom wick and be built here, I know that it could come down into here. So maybe I want to open up my stop a little larger because we're near that daily area and bring it right below there. But my target for profit, if I'm opening up my stop loss that much to allow this thing to develop, hopefully I can stay in this trade going into 3 p.m. power hour, and maybe the end of the day there's a rally. I'm not just looking at to fill up to there. Maybe I'd like to have it fill up to here and maybe retrace up to there. Okay, I'm looking for a bigger move. But if it starts to fill up to here and here without testing my drawdown, then I'll start to reduce my risk and bring it up as if I get the green volume breaking out of here. I'll break it down on the live with you guys. So I'll stay with you guys till another 20 minutes and I got to go grab the kids. Okay. But let's see. I went in on impulse. Okay. I admit that. But I like the way how I got a wick. I got a nice bullish engulfing candle starting. Okay. So there's also, I say, there's a time and place or intuition when to take an impulse. I am taking an impulse and I am aware of the consequences if I get faked out and it comes back down. Okay. But maybe this is the candle that's building and maybe it's going to build off of this and start driving. I don't know, but let's figure it out together. And then if I just want to recover 15 pips out of this trade and make up for my previous gold trade and then end this session in a scratch, that could be what I want to do with this trade. But sometimes you do that and then you figure it out where the daily bottom is and then you can get more out of it. That's 15 pips right there. If it comes up to this red line, that's 25 to 30 pips, guys. Like, I know it looks like a small range, but we got volume now in the market. So anyways, let's see how this candle is going to close with 90 seconds to go. Gold is retesting the red box now. So let's test our theory. Came up green, green, green into the red box. Let's see what develops there. Also with NASDAQ, can we just get a green bar close above this red box? That's what I would love to see out of this green candle. Can it just close above this red box? Just to build some sort of momentum. I'm just going to clean up the chart because I got too many red lines in here. I'm just going to clean this up. Okay, so tough rejection. That was my impulse buy, rejected. Inverted hammer. Can we hold a little bit of this green volume in the next 30 seconds? Can we build it back up? Or am I going to lose this entire green volume from all of the buyers of this time frame, and then it's potentially going to start to come back down? Okay, so it's, wow, there's a ton of selling pressure in today's market. Okay, that candle got heavy rejected. Here's the close. Even a little flash of red is an indication. If we don't flash red, it's still showing me that there is still a little bit of strength in that candle. And I didn't see it flash red. I don't know about you guys, but I didn't see it flash red. So it just held this little bit of initial buying volume. It's still there. So naturally the candle opened green again with whatever volume was left in that candle, and it's trying to come back up, but we still have our red box above us. We have not closed above that. We still have a long distance to continue to fill up this wick. So we got to get, now that's why I'm saying, can we get higher time frame volume? Not just some minuscule 5-minute volume. Are the daily traders stepping in here, right, going into power hour? Are the 4-hour volume, is it going to start stepping in? And maybe we can have a power hour 3 p.m. reversal. Okay. So it's showing me strength with the open of this candle, but remember the size of the wick. That was a massive rejection that we just had. So it's filling naturally, but it could just get a lower high and drop right back down. So again, let's follow this volume going into power hour together. We're 4 minutes away from power hour. Can we get our first green bar maybe going into power hour, closing above this red box, and maybe we can build off of it and start to at least recover a little bit of this red volume today? And I want to know, did we maybe potentially find today's bottom wick? I don't know. It's all going to depend how this candle closes, to tell you the truth. Is there any questions, guys, about the NASDAQ buy? Hopefully I broke it down step by step, my thought process. We're still in this consolidated zone, but are we going to start to, what we need, guys, you guys know as well as me, we need a green body to close above this red zone. Otherwise, it's a lower high, lower high, lower highs, and just maybe they'll push it right back down at the start of power hour. Watch this. It's happened to me multiple times when I scalp. Okay, so I'm telling you how important it is of this green body to close above here. If not, power hour could start right in 2.5 minutes and then come back down red and then force maybe a physical double bottom. I'm going to say right below these wicks, right in here. And then see if the real buyers will step in right around here again. But there's nothing I can do now, guys. I'm in the trade. This is how I trade. I'm in it. So I have to continue to watch what's happening. And then the volume dictates what goes on. You know, so I got to continue. Every time it comes up there, look how it's getting rejected and coming back down. So there, we just lost all that green initial volume that opened this candle. See how it flashed red? But as soon as it flashed red, it picked up pending orders and just came up green again. There's red. Now it's a shooting star. So we're possibly going to take out our prior candle's low. It's still holding. So I know it's really technical, but in the depth of market, we're still holding there, okay? So as it's holding up here, there is bidding and asking going on up here. So it's still holding. Now we're approaching 90 seconds to go into the final trading hour of Wall Street, which is called power hour. See gold? It came right in there again, rejected back down, one more time green, and then they're slamming it back down red into that red box. So that's why I'm showing you guys the significance of these boxes in order to flip the momentum. The green came back up there again, and the sellers are absorbing it right back down. Lots of popcorn. Get your popcorn out, Rob. Yeah. There's a lot of resistance in today's market. Now, this is the second most bearish candle, the shooting stars. Okay, we're down to the low, and it can come down into trade, potentially maybe into this demand zone where I can see where it had a wick there, had a wick there, it had a wick there, and it had a wick there. So is it going to come all the way deep down into here, or will it produce a higher low and we don't even come into the green box? Very high probability it probably come in the green box, the way how the volume is coming down. But watch now. Now you guys are going to see a little bit of manipulation. Watch. This candle is closing in 10 seconds. Watch for gap up or gap downs. Just watch. And let's see if we have any gaps in the market. This is where they come to scoop liquidity, the gap down. Okay, did you guys see it? I don't know if you did. Okay, it closed right here. They gapped it down. Did you see how it came up with that wick? They filled that gap, they filled that imbalance, and then they came back down. So this candle has a high probability that they filled that gap and then they want to drop it down. Okay, just like I explained there. Now they're coming into the demand zone right here, this green box. Now will the buyers be present and flip it back up? Okay, so they are. Now can we start to drive? So did I explain that properly, guys? I said you're going to see a gap up, gap down candle. There it is. I don't know how else to explain that. It closed there, they gapped it down. If you initially saw it came with a wick, right and filled the gap, then it rejected and came all the way back down into our demand zone, and now we're getting our double bottom, our buyers there. Okay, so now again, we don't want to just drive up to the red box and get rejected again. We have to capitalize with this volume. It needs to close above this red box because it will just do the same shit it's doing all day. It will just come right back down. Okay, so we want one green statement candle to push and close above here. That could be our second bottom starting the power hour session, and I'd like to see us capitalize on this. If we lose this momentum, then I don't think it's going to be there this afternoon. It's potentially going to keep selling down. Okay, so we got rejected. With all of that volume, with all of that momentum, we just got rejected again in that red zone, showing how strong today's sellers are. Very, very, very strong. This pattern on any other trading day potentially would be breaking out of here, but there's just so much resistance today. Now look, we lost again all of that green volume. Okay, I'm starting to get exhausted watching this, like to show you, and I'm just in one trade here. Could be multiple traders filling up here, pending orders. So now, is it going to come? Take out our green box that we've been creating for the past 5, 10, 15, 20, 30, 40 minutes. Are they going to come back down? Take out the liquidity pending orders. Those are stop losses. My stop, I told you, I'm going to leave it room to breathe. That's why I have my stop a little larger down in here. Gold, it's doing that 4-bar play, that kind of double bottom, coming back up, consolidating, barcoding, red, green, right below your supply zone. Okay, I got 5 more minutes, guys, on this call, regardless what happens. Okay, I gotta take off and go grab the kids, but I might have to manage this on my way to the school to go grab the kids. So good position out of gold coming up. Will it close above here? Can you figure out where 50% of this is? Build off of this. NASDAQ. Holy. The buyers were there. The way it was perfectly technically sound candle. The way how they gapped it down, filled the gap, came down, higher low liquidity, tapped the green box, and we were coming up very nice and green. But no follow through. No follow through, no follow through yet. Volume is still consolidating within this range. Okay, so we got now 60 seconds. 60 seconds. Okay, so let's watch going into the close. Can they come back up, close relative to the high? Maybe. Will they officially close it above there? Again, I got to let the market do its thing. There's nothing I can do here. I can't, even if I place another buy, I'm not going to move NASDAQ. So got to continue watch what's going on. 30 seconds to go. I always pay attention closely to the last 30 seconds of a candle. Same with gold, if you guys are watching gold over here. So you see how it came up green, green, green? Again, we lost that momentum. They're pushing that volume down. Here's the close. Closed with a tiny bit of green volume, basically where we opened. So now selling pressure could continue come in the market and try to come down into this green box. However, if buyers are present to make a higher low, which they just did at the start of this candle, so we got a higher low. But remember the uphill battle we have, all of this exhaustion. So we are getting green volume, but it's not enough to continue to fill. It's filling a little bit, but then we get rejected always at this area of supply. That's why I'm telling you the importance of closing above. I'll be there in 5 minutes. So if it comes up here, like that's why I'm telling you the importance of closing volume. If it can push, I'll probably be off the call, guys, but if it can close above here, retest this, that could start that little afternoon rally. It might be just a small rally because we've seen the supply all day today. I wish I could stay on the call longer with you guys to watch this, but I only have the close of this candle, then I got to take off. Oh, sorry guys. So gold closed above zone, red to green. Okay, so again, that red line, when it was in the bear zone and the bullish zone, that's still representing 50% of it. So if it pulls back, now you got a little bit of a short-term depth of market on gold. Okay, so the buyers did a great job closing it above. So if it comes back down red, look for a retest here, or it could fill up imbalance, driving up to there. We got a good, again, I don't want to say get excited about this candle because we could have got excited about that one, and then we were disappointed in the close. So as a trader, I know what to expect. 2.5 minutes is a lot of time. They could definitely continue to absorb all this and continue push it down. That's why the follow through is so important. Okay, but while this is happening, I only have 2 more minutes, guys. So there is a free Telegram channel pinned at the top of YouTube for you guys. Please join it. Giving some giveaways there. If you want to join our team, guys, there's a 50% off on all the premium plans. Free blog for you guys. A lot of good information on this blog about the entire markets, everything. So we had flash manufacturing, breaking it down, and flash services. Next Wednesday, remember that we do have NVIDIA's earnings after hours, and continue to watch just on the weekend how these daily candles close, where they close, whether it's NASDAQ, US 30, gold, crude oil you're looking at, or any specific security in the stock markets. Should have an interesting week next week. It's the last week of February. We do have some big earnings, option expiry at the end of the month, so it's going to be a very, very interesting week next week, guys. Unfortunately, that's all the time I have, like 60 more seconds. So you guys know I'm in this trade. My stop loss is below here. I'm going to look to see if there's going to be an afternoon rally. Right now, it's failed miserably multiple times here. So we'll see if it gets there. I wish I could stay on the call longer and break it down with you guys, but I do got to go grab the kids. But guys, I wish you guys all a good weekend. Okay, have a good weekend. Review your trades, please. To the traders that had a really, really good week, congratulations. And everybody else, if you guys are learning something new every single day, we appreciate it. Markets are going to get volatile. They're going to get really interesting in the next little bit. So just continue learning. The best thing that I can teach you guys is just be patient, disciplined. Don't over risk, don't over leverage when you take a trade. Allow it some room to breathe if you can, without over leveraging. That's it. But guys, I got to get out of here. Okay, so have a good day. Thank you guys. Have a good weekend, and we'll see you guys next week.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.